Good morning. It's March, or no, it's April 3rd. Hope you guys had a good weekend. Hope you had a good first quarter. We're into the second quarter. We're going to be streaming stocks, options, futures, trading, charting, technical analysis, all that. Sub up, like up, comment down. Happy money sticks around. I'm going to get set up here. Done a little Yaz. And yeah, make sure and share the stream. I am doing the same on Twitter. I'll share it on Discord. Did Discord get a live stream feature or something? Oh, you guys talking about it on there. You've always been able to, or you've been able to live stream on there for quite a while, but maybe they updated it. We got an oil production cut, causing oil to rally. Did I share the right leak? Image isn't right. Looks right. Ah, yes, EVTL. Yeah, put a link for Discord and chat. If you guys aren't on there, jump on. Free to join. About 10 minutes to open. Yeah, I saw I heard BBBY change it to a 20-to-1 split. I didn't actually see the filing. What I heard though. EVTL is down 1.5 coming into open. GameStop down 0.2, SPY 0.11 to the downside. Opened up a lot of plays last week. BBY had a little gap up after hours, I think, on maybe that filing for some reason, or it's just little liquidity from all the dumping they've been doing on it. I'm not sure. Down a bit now. Now it's up 3.5. Birds is holding up really well. I think I might want to get some shares of this. Again, did I already get shares? Oh, I sold the shares. Yeah, I bought some here and sold them. Actually got a good exit on there. If I want to get back in though. I got next on that double top, but it's holding up really well. Morning, Big Hugs. Morning, Owl. Good morning, Jan. Let's see. AI is flatted open. What are we looking at? Got EVTL. Ubo. Holding up pretty good though. Got about 5 minutes to open. GME down 1%. MCB actually a little bit green. MU is down. Might close my BBBY calls at open. We have to see if it where it opens at. SI's down 3%. Still holding up. HC is up 1.5. Wish. Can you wish upon a star? Makes no difference who you are. Like I had a I saw that Wall Street Bets post when you guys posted. He has a lot riding on Wish. Morning Rally, morning Julian, morning Rad. Their gap around 79 on GME. There's a gap down there from earnings in the 17s. I'm not thinking we're gonna fill that yet. But yeah, if we lose this level we continually bounce off of, then we might, but I still have another support at 1940. I'd want to see that broken too before I would think the gap would fully get filled. But yeah, I think we're gonna rally before we come back down. 0.20. Yeah, I saw the pre-market on BBY. Extended hours I think was higher, or no, was that pre-market? Yeah, there you go, 53 cents. So made it back up to kind of that that open actually. Yeah. So we might be seeing a bottom form here. I'm not really gonna get. We'll look, see what the island, see if they're just making an island bottom. Not much of one yet. Yeah. Yeah, EVTL. I know. I think I might. Let's see. I might add to that one. I've got a pretty good amount actually. I want to add to. I want to add to Wish. Hey Cesar, good morning. Thanks for your likes, guys. I appreciate it. The same ones from last week are still looking good, thankfully. No big like gap downs. See what see what the first hour or two tells us. But the ones I went long on Friday, that was partially why they looked good, and then Friday they held up well. So really, I would think the next week would be pretty strong if people weren't scared to hold over the weekend, take profits. So merger Monday. Well, they've got 3 minutes before market if they want to announce anything. Oh, open bell. Shouldn't be. CDB, welcome to Money Crew. I think you already were on the crew. You just joined? You just flexing right now? Is that a subtle flex? A weird flex? Morning, Mahmoud. Spring break. Nice. April 3rd. April 3rd. Like spring break's been going on for a month. I got a notification. Well, thanks for coming to member. Appreciate it. Weird, the notification was different. Thanks, CDB. I appreciate it, man. Yeah, no, he's a super smart guy. No problems with Pickle. Let's look at pre-market. Top gainers. Where we at? See if we recognize any of these. Indo is one I traded actually at IPO. AULT, I recognize that one. I recognize BRN. USA. Natural gas or oil and gas. Energy one, I think. See if anything on here. Canoe Health. Or Cano, is that how you say it? Yeah, Cano. This is different than Canoe. Well, I had a big sell-off. SPY down 0.15%. Bed Bath & Beyond. Little gap up still, 5%. Morning Human, Shop Brag. EVTL is not down -5. I don't know what Robinhood's showing you. I'm just showing down down 1%. But it did have a pretty big candle there, so maybe that's not 5% though, I don't think. Market's about to open. It just opened. You didn't get a bell. There you go. Yippee. So they cut production on oil, like Saudi Arabia did. So we got a huge pump on oil prices, 5%. Such a weird string of events. Just what's going on? It's so strange. Oh, Macy's with a gap up. Macy's has actually made big runs before. Is this earnings? Price target increases. $10 million on BBBY volume. Yep, pretty heavy, and it's back down a bit. Oh, it didn't update. So I actually did get some, I think I said it on stream, I got some BBBY calls on Friday. Just in case there was kind of news over the weekend, so I'm gonna try and sell them here maybe. for a little profit. Please, por favor. Buy's moving up. I'll wait a bit. That might have a bounce. 9 Energy's up 13%. GME is pretty flat. What Larry Chang bought 5,000 shares. Not a huge amount, but I don't actually know what that guy's worth, so I don't know what it really means to him. But it's good to see buying at these prices at least. Weird. What's high on my watch list? We got IronNet. Oh, the market's still waking up, I think. All the tickers. Oh, let's see if we got any kind of... No island yet. Not even a gap now. They just already filled the gap. Okay. Already out of these calls. My MU puts up 31%. I hold that for a bit. Look for I guess the first target would be, I don't know, probably this trend line right here. This 58 as a resistance. Occidental's up 5%. SI is down 3%. Good morning, Ace. Good morning, Skrillz. Is this down? This is another one I want to just kind of hold this level. I like it. SPY rallying up here. GME green. BBBY red 1%. Oh, it sold my calls. It's so weird. Sold some of the calls on that dip. Isn't that weird? That's how Birds options trade also. Get some candles drawn in here. I like Birds. They held up really well. Look at Wish also. You look at my notes and see what ones I missed. Pull the pre-market levels. See if we dance around in there. BY down 2.25. 3.5. GME up 1.2. It's moving up with the SPY. Schlumberger. AMC another pop around Thursday. AMC's up 1.4. They're just getting a pump right now. SPY, I think. GME up 1.3. Wish. Wish is looking nice. My notes we don't want to add to. Away. Weird what's up on this list. BuzzFeed's up 5.5. I think just not a whole lot of stuff is very green, at least on my watch list. BuzzFeed actually looks like a nice chart. Thanks guys for your likes, I appreciate it. Hope you had a good weekend. Let me know what you did this weekend in the chat. What's the highlight? Your favorite? Look at little GameStop go. We're looking at that trend line too. It's definitely broken out of there. Pretty strong for a Monday. Maybe filled here. Filled one. Definitely an individual investor. highs. Ripping. 409. Excuse me. Yeah. We fill. I think we filled that gap last Friday. We're just kind of still getting to a high. I think. Doesn't seem like this rally's over. Not real resistances around here. Nothing crazy. Turn that down a little bit. SPY was great. Yeah, it was. Yeah, it's been wild. Just big gaps. You know, we had like choppy market all through here, and then just these weird small bodied, you know, convictionless moves with just gaps. So little green candle there on BBBY. GME is up 1.2. BBY made a new low from yesterday. It hit 41 cents. We'll see if it hits 35 today, or if it starts to kind of hold around the 40-cent range. SPY moving up green. MU put is up 47. That ain't bad. That ain't bad. MCB is down 4%, but my spread is still negative. There's a big spread on the spread. One of the disadvantages of doing multiple leg options. There's a lot of liquidity on the chain. Much nicer. Macy's 7.3, ISPO. I want to add to in the morning. Maybe birds, maybe wish. Maybe both of these. Maybe not birds yet. SPY just broke that high there, I think. Well, it's close to breaking the... Yeah, it did. It broke the pre-market high. Really post-market from Friday. I don't know if the futures went higher or not. Give me holding up 1.3. Birds down 4.5. Yeah, it has this RSI divergence. I'm going to give it some time. On the hourly. Wish. Might be a little double top here, but really just looks like it's consolidating. But yeah, Wall Street Best Boats was pretty funny. He actually has done some research on it. I mean, you would imagine with that big of a position, but he likes it fundamentally. I just like the chart. I think his cost basis was like up here somewhere. Yeah, I think I'm gonna add to this one some. Ubo calls green. That is neat. Yeah, chart looks pretty good too. Divergence is not quite as nice as Wish, but still kind of there. Have on here. Yeah, I need to add to Wish. Just doing shares for now. Look at this option chain though. A little red candle rejecting that pre-market high now, or post-market. Yeah, even looking at the monthlies. There's some liquidity. We've got 12,000 open interest on Wish. The half dollar, 74 volume today, so it's not bad. Monthly at least. Yeah. Such a cheap stock though, it's almost just worth it to get the shares, I feel like. Unless you're Donero. Good morning, Donero. How much do these things move? What is fun about really cheap options is you can basically double really easily. If it's 2 cents, I can go up to 4 cents pretty easily. If it's 1 cent and go up to 2, like that's the next one up is 2 cents, so. T-Cat's up 11%. Macy's holding on. Oh, looks good. I added some Wish shares there. Looks like it's coming down. I think, yeah, I'll see if we can find support here, 41 cents or where it bounces. I did get out of some of, or I guess just one of my BBY calls. These are for May, so I have a bit of time. Nothing crazy. Half of Ford's global vehicle sales volume is expected to be electric by 2030. Wow. Finland to join NATO tomorrow? Wow. Did you guys see the filing for BY? Is that true? Did they change the split to 25 to 1? MU down 3.5. Oh, the spread on these Fubo calls is awful. Oh, I kind of sold off a little bit. Why didn't I get more time? Interesting. Trying to get more and more time and closer to the money. Just increase profitability potential. GME with a big candle down there. BBY down 4%. Did make a new low, 40.18. Thanks for your likes, guys. We're at 18 of them. Kind of consolidating up here at the top. Huge spread on MCB, but it is now green, down 7%. That one I don't have much time on either. MU put is holding on. He put some stop losses on these. We'll watch all of them. I have one on HKD. Actually pretty flat. That's nice. Let me put one on SI. I think a break over $1.50. I want to close. Actually down quite a bit on that. I definitely chased it right here. It was stupid. I knew it was hitting a resistance, but I just wanted it. what's EVTL doing? EVTL's down 2.3. Leave this one alone. I think it definitely keep going. SPY, new high there. Broke all the highs. 409.99. 410. Yeah, we're getting up here. Put some levels up here, see what we got. Don't even know. Maybe something like that. I don't know. 410, probably some, definitely some volume up here in this range. See what that does. Occidental up 6%. Buys ripping again. GME's moving up with it, 2%. 9 energy is up 17. Yeah, from the oil cuts, energy stuff's getting a pump. Oil at least. Watching CPI to port. Called CPI. Call him CPI. GME's rallying here. 2.5. AMC's up 1.5. This is when you'd like BBY to follow the SPY, but really I'm kind of glad it doesn't. We've got GME. SPY still moving up. 0.6. Tempted to close my MCB early. I didn't get a whole lot of time on that spread. I don't know why my Fubo and yeah, I guess it's just Fubo. Didn't get much time on those calls. Border Patrol, and there's guys that work the bridge. MCOM down 8%. So I'm curious what happens with this one. Definitely looks like a bear flag at this point, though. HKD, pretty flat. 2.5. My calls are green. First time in a while. First time in a while my calls are green. Should I close? I don't think so. I like this break. Got resistance here. The thing is GME's catching steam at just the very end of the SPY move, so at least that's what I think. You know, if SPY only moves up to 415, 416 even, you know, we're just catching kind of the last couple days of it probably. That seems to always happen. SPY makes a big move up for a long time, GME just trades flat. And then right towards the end, GME rallies and then SPY shuts down. That's when it shuts GME down. Kind of weird. Urbana. 1.38%. About to explode. It's getting up to a resistance here at $10, of course. Could be making a little cup and handle. Got a nice inverted head and shoulders there. Okay, bullish MACD, green over the 9. It looks good. Gotta get a break of that 10. I don't think, yeah, I don't have any exposure on this. I chose Fubo. And Wish. CBP, Customs Border Protection. I was trying to figure out what CPI was standing for. I was like, Customs Patrol Interrogation. Bed Bath down 4.5. Getting to that. I'll hit a new low, 39.51. So it broke the 40 cents. 35 cents is definitely on the table today. Maybe even 30 cents. If we're still repeating this pattern of kind of 2 legs down. GME 3.5 there. That ain't bad. 3.3%. Microvast coming out of nowhere. 11.5%. This chart looks pretty nice. Yep, you got a divergence there. Already made a pretty big move, but yeah. Yeah, it looks pretty good. 100% from right now, -4. Yep. 9. The head and shoulders. Whoa. Oh no, I didn't get more birds, did I? Dang, I wanted it too. Alright, I can still get it. Birds ripping. Alright, picked up some more bird shares. Didn't really buy the dip on that one. Kind of happened fast. I was cycling around in these other stocks. I like it though, holding up really well. Oh, that's why I didn't get it, because I had the RSI divergence. Kind of on the hourly, and now that candle flipped green, just looking at consolidation. This thing moves like 10-15% so fast. Drop out of AMC. 2.5. That's not a very big move. GME's at 3%. Mullen dropping to good levels for your short position on it. Yeah, it gave up that rally. That's why you want that green over the 9. Helps confirm. No conviction during the trading day if you get just red candles. Bunch of gaps. Yeah, Birds is looking good. Looks squeezed. Looks like it's getting some day traders in there. A little bit of volume. This thing's gonna break out pretty good, I think. That 30, what was that? 30-cent level? Yeah, that's a big level. It's just wicked above there so far. If we can get above there and use that support. 40 is definitely on the table. And then what's going on? 45, yeah, just by 5s and 10s, it looks like. Fish down 5%. BBBY down 3.5. It bounced here, up above 40 cents now. Kubo down 3.3. Yeah, I was buying some of the plays I entered on Friday were not the best timing, and I kind of knew that, but yeah, just gotta hold them now. I think they'll be good. It's just bottom on a rally. I'm moving down there. GME also. Dude, it's ridiculous how tethered it is to the SPY. Very curious on what levels this thing gets out of control. If it's still 30 or if it's lower. Goldman Sachs investing about 200 million in 3 Greek hotels. Wants to buy more? Greek? Like in Greece? Oh, we will change the shares outstanding. Oh yeah, 428 million. Is this from the dilution of the warrants or the preferred shares? Like those things converted over? If it tells me heartburn? Oh yeah, 8%. I didn't put a stop on that one. I don't know. I mean, on the daily, it's not too bad to me yet. Bit of a retrace. See what happens. $1.87 is kind of a level here. See if it bounces on that one. What we saw here on EVTL though, I don't think this rally's over with that volume and that momentum. You know, that's pretty rare for this one to get that. So, and when it has, it's been followed by pretty large moves. And this was just the price action, not even really the volume. We have both, and it's at a cheaper price too. We'll bouncing a bit on the 50 moving average. Like MU's coming up some. I think I'll hold the MU for time. Let's pull up 40 cents, Kenny. Unless this thing's double bottoming here, I don't know. I think that's going to keep dropping. Definitely bought into the hype on birds there, but I still wanted it. It's held up very well. Below 40 cents is 35 cents. GME 1.5% now. SPY's grinding back up though. Consolidating here. 410.58. Oh, new high. 410.73. US ISM manufacturing came out at 10. PMI March was 46.3. Estimates were 47.5. US construction spending was negative 0.1%. In February, consensus was 0. Pretty close to expectations. Sergey Brin, Google co-founder, is one of 4 billionaires subpoenaed in a lawsuit about JP Morgan's link with Jeffrey Epstein. BY's down 5. SPY's squeezing. MU's got a pretty big bounce from the bottom. Gas still low. $2, 2.1 on the futures. SI down 5%. Bird's little pump there's stopped. Green, just a little bit green. That is all. Wish down 4.3. EVTL had a bounce from that, down 8%. Now it's down 3%. Yeah, I kind of wanted to hold that $2. Yeah, this thing's a liquid, man. It's just so jumpy. Or no, the 187 was kind of what I was looking at. Oh, looky, looky, looky. GNS up 6. Things had a pretty big sell-off though from that. Once it broke that support. So there's a gap down here. Yeah, there's a little dead cat bounce. Looks like the gap will probably still get filled unless if there's some news or catalyst. Oh, actually 9 is making an island bottom. Might actually go long on this one if this holds. Good morning, Gene. Yeah, that's a pretty textbook island bottom, actually. Increased volume a little bit, too. We'll see by end of day if this comes down and fills it, but if it doesn't, let's see, this week, give her a check. April 3rd. So we had ISM just this morning, just now at 10. Construction, basically at consensus. Tuesday factory orders, job openings. Wednesday ADP employment, US trade balance, ISM services. This is probably the biggest one this week on initial jobless claims on Thursday. And then employment and unemployment rate report. So Thursday, Friday looks like could be catalyst for some movement. Good by spy puts. It's like not a question I can answer for you because I don't know your financial situation or your plan or your strategy. Depends on how long you want to hold them, what strike, what date. But I mean, it seems like we're nearing a top, but it hasn't showed that it's stopping yet. So the trend is your friend till it's the end. 2 to 3 week. Yeah. I mean, I think that's going to top here, but I could totally be wrong. And who's to say it's not just going to do this? This burned 2 weeks around that high. So, you know, it doesn't just go up and come down. We had all this, we had the bounce here, we made that bullish pattern, inward head and shoulders, but then it chopped. We could have got bullish here, but then you have to burn basically five days or so before we actually got the breakout. So unless there's some catalyst like with PAL or something, I don't think it'll necessarily just hit the resistance and then go straight down. There'll be indicators. There'll be some red days and that potentially, but yeah, and some bounces too. Ox E, is it going bankrupt? I got stolen. Alt? Maybe filing for bankruptcy. Not suspended though, it's actually halted. Why is it halted? Files for bankruptcy 3 hours ago. Yeah. It's weird it says halt though, not suspended. I feel like that would usually be suspended. GME came down there, back to break even. Should have sold some covered calls, poor man covered calls. I don't know, I'm still liking it though. I think GME is going to catch the end of this move. That might be a good indicator, honestly, for SPY puts, is see once GME gets kind of squeezy and gets shut down. And that's when you know SPY's going to come down. When it's halted, there's not trading anymore. It might come back where you can sell stuff, but it, you know, might be down 90%. Or it might be where it's at, but yeah, it's not good. You're holding. You're basically stuck, and when you then can trade it, it might be worthless. Or close to worthless. ENS rallying 10%. Probably still a dead cat bounce. Let's see what levels is 32. Got a little gap here. Looks like ENS is gonna fill. MU giving up that bounce. CB just doesn't really move much. Looks like Fubo's getting a little rally. Oh, my calls are coming up. EVTL shares. PERD's now negative 2.6. The thing's move. This thing moves crazy. Good for day trading. GNS now 15%. Is that gap filled? Gap has been filled on GNS. Maybe this is some level. I don't know. That's a pretty big move. This thing moves fast also. Like, why is this the bottom? 0.3. Kind of a support back here, but yeah, I'm not gonna be buying into that at this point. GME now negative. He's got the pump with SPY, and then that was it. Didn't hold up with it. BBBY under 40 cents. Down 6.6. EVTL bouncing up a bit. HKD 687 down 1.87. COM is down 11. This one just reverse split and had like a spin-off. So I'm curious how this one plays out. On BBBY, could be repeating something like this. Gap, drop, right here. Also, it kind of lines up with earnings even also. So, maybe. This was signified by the island bottom though, so just on the hourly. Yeah, there was a gap there. Volume was increased too. So, looking for a repeat of that, maybe. Be the buy signal. SPY moving up here. GNS 16%. 917. This is kind of doing an island bottom on the daily. Doesn't like fill in this gap. I think I might want to go long on 9. Did have that head and shoulders, but I don't know, maybe the whole move's over from that already. Now that we're getting an island bottom. $2 to $10, really? I mean, 2 cents would have been a pretty poor trade, though. But I'm imagining there were not much time and way out of the money. So you can't sustainably do that unless you know or anticipating something like that. You know what I mean? Like, you can't be consistently shooting for that. Okay, closed out of SI, got stopped out. GNS is rallying here, 21%. So I broke that support. Where are you at, Pong, man? SPY breaking out. New high on SPY. GNS 20%. This thing's gonna get halted. Oh, not yet. CP down 7%. Spreads are so wide though, I still can't make money. Not yet. Wish is down 6. EVTL just wicked down below that $2 level. That's pretty bullish. About 2.3. Bird's down 2 now. Crazy. The moves on here are just so fast. That's 10% move just this morning. ES to 7. Yeah, I think it could move back up there. I don't know if this is the beginning of that rally though. I'm not thinking it is. I'm gonna wait for sign. I don't see any signs of reversal yet, even though it is green day. Might be a good short even. The options are pretty new on here though. I don't think they... Yeah, they're huge spreads, not very liquid. Yeah. Closed out of the rest of my BBBY calls for break even. Only one I sold for profit, and I'm just trying to dump the rest now. It's kind of just as exposure for weekend news. And I'll probably leave the options alone. I can always get shares in after hours, chase a bit, and then maybe on the weekend I'll do options again. Everyone moving. 2.5, yeah, just broke that $10. There you go. See what happens here. This previous high. Where could Genius be moving? I don't know. I was looking for a short on it. Just seeing a little dead cat bounce on the huge sell-off that's been going on. Yeah, I mean, it's up 15% in the last hour. Down 48% though. The last 10 days. So I suppose like if it goes really bullish, it would be coming back up here to test $2. That's really bullish. If this rally was a big rally, I think that's probably the highest it could go. But I think, yeah, I don't think it's over to the downside yet. High, new high there, 411. Thought about going long on some contracts. I'll be patient, wait for the top chop, short it, maybe. Spot would have been this breakout. I got a lot of exposure yesterday on other stocks and options, so wasn't really paying attention to trying to trade the futures on here. But yeah, I mean, this line right here was pretty clear. That was the breakout spot to go long. There's 410 that broke. Yeah, these levels up here, anyone's guess. Could do all this today and could have our top today maybe, but then it might just do this for a week or two, not necessarily just start dropping. But GME is not getting the love anymore. BBBY, new lows, 39 cents. Down 8.7. Yeah, 35 is, I'd say, is probably next. Maybe even 30 today. The resistance 412. 412 and a half. I've got a line there at 412.4. Not trying to top ticket though, so doesn't, I guess, necessarily matter to me exactly what the exact top is, because we don't know. For some sign of reversal. Been a pretty big move though. These small candles and just gaps. Yesterday and today now look like the first ones are actually candles, bodies. BY back to 150. Buy up almost 0.5%. Okay, what's going on? Looks like everything's green. Industries, specialty retail, REITs, energy, everything green. Except for, I guess, small caps. Oh, there you go. China stocks are down. Heard that rig is down with how much oil's been pumping. Maybe the small caps will get the tail end of the pump. Your motion 3%. Gap is up 3. Yeah. Long term's probably pretty solid today. You had a bigger bounce there. I guess it's hard not to go up when everything is rallying. CP still holding out the low, down 7%. Yeah, it's just like the risk on like small caps that aren't really doing anything. They had their pump end of last week, so maybe they'll kind of rally into this week. Nirvana hanging out there just above 10 bucks. Hey, trader. Yeah, if you guys haven't subscribed, it's subscribe hour, 10:30. That's subscribe hour. If you didn't know, this is when you subscribe. Check that box if it's not red. Make it gray. If it's not red, you're doing good. That's it, yeah. Right? I think that's how it goes. EVTL had a nice bounce there. Birds 3.5. I'm thinking like it maybe still could get down here. It's getting kind of squeezy earlier though. That 4.5 on birds. Oh boy. Holzman, if ECB slows hikes to 25 basis point, hard to go back. Half point still on the cards for May. Thomas Pritzker, the chief executive of Hyatt Hotels, has been subpoenaed in the Jeffrey Epstein versus Virgin Islands trial. Wow. Money puts. Are there any puts? Out the money? Well, 50 cents on B right now is in the money for puts. So, yeah, all the puts are in the money. Got 14,000 at the 50-cent strike. Oh yeah, this is a short week. I forgot. That's right. BNS up 13. Yeah, I don't think it's gonna last. Carvana 2.8. GME with a weird little pop there. BBBY kind of just edging down, little by little. CB still hanging out there. Bankruptcy on BBY? Maybe. I mean, a reverse split, that's definitely still, it could be a catalyst for a move or any, of course, of the hype and speculation. If any of that stuff comes true, that would definitely do it too. Both calls are green. Weird. Not a big spread either. Down 1.24. Yeah, SPY's moving without the small caps. Everything's green except for like risk on, small caps. I think kind of same thing like last week. They didn't move till end of week. But I'm not sure though, because everything was green on Friday. We'll see. Sometimes maybe they lag. They'll lag the more broad market. Ah, SI. Little stop loss hunter there, maybe. Triggered my stop right down here. I might want some cash secured puts on SI. I'm gonna do it. $1.50. Aggressive. Yeah, these are the ones I was trying to get last week. They're better. Let's see. SPY dojied up there. Inverted hammer. Good exit for INSI. Well, depends on your plan when you entered it. Just had quite a move. I mean, it's looking solid still. can always like scale out, not do it all in one trade. It's usually the best way to trade. Scale in, scale out if you have that option. Sell some. Sell enough to make it free. It's definitely a popular strategy. Works pretty well. Take all your risk off, basically. That said, I mean, kind of already break through this resistance at 5.5. Depends on your financial situation. No way I can really answer that for you. I mean, but the momentum's all still there. You've got a break of that 5.5, which is good. Definitely some still more resistances here, like $6. Little gap fill there at 634. Volume has been increasing, so it looks good. I mean, taking profits here like might be a little early, but again, depend on your plan already, and a lot of questions that only you can answer. But the rally looks good, and the volume's increasing, and it's, yeah, I don't know the catalyst. Probably some good pharmaceutical approval or something, right? New low level is today, 39 cents. So haven't hit 35 yet. Volume this morning was pretty substantial. 61 million in that first hour. That's even more than Friday's. Or I guess it wasn't Friday, whatever day that was. Yeah, that was a huge amount of volume in the first hour. Birds, you kind of just have to hold shares up because it moves so fast. So you have, I guess, alerts and stuff, but too hard to catch that one. EVTL down 3.8. BBBY 8.7. Ubo down 1.5. CB still hanging out down 7. MU this one's down 2%. HC getting a little bounce here. That was an awful sell-off. That was bad. Wish getting a bounce. Moving down. Yeah, small caps aren't doing anything today. The rest of the market's rallying good though. Getty had a move, just broke out. 11.5%. Not sure where that came from. Crazy. 39 is even for still really low. I think they had a filing this morning or Friday maybe. I didn't see it. Did you guys see it? I think they're gonna do. They changed it, I think, to 20 for 1 or 1 for 20 or 20 for 1 rather. GME popping up here. That's strange. Inverting the SPY. Spots up 1%. Bank of Canada survey, 79% of firms expect 3% plus CPI over the next 2 years. Parents are paying consultants up to $750,000 to help get their kids into Ivy League colleges. What? The 2- and 10-year Treasury yield curve deepens inversion. So now it's the most inverted that it's ever been again. I go with the 2 and 10. I'm moving down here a little bit. Not sure where the top will be, but I think we'll have time to get an entry. You know. Ubo down 2.8. BTL wick down again. Thing. HKD is holding up. My most stable stock, HKD. VWAP go. There's VWAP on there. Is moving down here. VWAP's at 410.25. MU's down 17%. Micron 2.5. CB is starting to break the lows, down 8.25.
Last very long.
What about Macy's?
It's to be determined if it's still going to be downtrending. I guess if we get below 16 bucks or the previous low.
I feel like at best we're back in the middle of a fairly severe downward move.
Got it. Okay. All right. Macy's with a nice bounce, but not changing anything just yet.
GME
big picture.
Gotten below,
or
using VWAP as resistance with this SPY move to the downside.
Let's talk about that first two, Renita, because
they're talking a severe downtrend in Macy's.
Quite a bit. Downgrade from Bank of America on this stock. What are they saying?
Well, they are seeing that downgrade and realizing it right now in the share price action. Bank of America downgraded ADP to an underperform from a neutral and cut the price target to $211 from $249. That still suggests about a 3% move to the upside from where it's trading now. But the analyst says that the backdrop of slower sales growth and a waning estimate for the upside potential. With that, there could be a risk to the stock's valuation multiple. And that
little green candle there on BBY. Actually just sold a couple more calls. I had a few left.
Shows that ADP tends to underperform the S&P 500 during that initial phase of rising unemployment. And so we're actually going to find
39
out
cents.
more though, about this because earnings
barcoding.
later this month on April 26th.
40
and Wall Street
cents.
analysts, by the way, they're expecting earnings per share of $2.44
$40.75
on revenue of $4.9 billion, roughly.
So I suspect
look for an entry on 9.
Macro connection, and it definitely does. It sounds like they think the economy is going to slow down.
Yep, it sounds like
oil,
it. And with
they're going to keep rallying
the
from
need for these processing companies with companies that need to process employees rather, maybe the need will come down a little bit. And
the chart looks nice, but
the whole waning demand, it looks like that's already started to happen.
If you're still at the macroeconomics of it, it's not a good trade. I don't know.
Processing to do.
That Head and Shoulders was
essentially right.
I don't know if that move's done either.
Way to look at it. No, I mean it makes sense. It resonates. That being said, though, I guess it is somewhat of a
actually have a little inverted one on here
because employment has been quite strong. Surprisingly strong, of course, over the past year. But the chart maybe hasn't, Rick. It seems like it's just kind of meandering.
Well, I actually thought it was seeming like we were getting a little improvement. Once again, before the market opened, this report changed things a bit here. But we were breaking out to the upside from this downward sloping trend line that we have been seeing for the past few months here. We also were pushing above our yellow 21-day EMA as well as the 219 mark, which is this green dashed line. That's a point where
GME calls it perfectly.
Out a few times in the past.
I haven't done very well.
Several times actually, and further back as well. So we did break above those 2 points. However, today's move has brought us back down below both of them. We also stopped short at the confluence of our orange 63-day EMA and our volume profile point of control, which are quite near each other too. So that would be a hard line in the sand to get above as well. So
I like it. I think it's going to be good, but I don't have much time on my
once
options.
Again, but things really took a turn after this note here. We're back below the midline, suggesting that momentum is back in the hands of the bears here.
Same with MCB.
downside,
really.
the 211 mark, the price
This thing
target
just
that
looks
they
bearish,
mentioned
though.
seemed reasonable to me because that's a point where we bottomed out here during this most recent range. So a move back down to this point right here would not be a crazy thing to happen.
It really seems like that
gap there. I just
219,
need
the
that
green
gap to
dashed
fill,
line,
actually,
is a very important
26.54.
place on this chart. You've got the big candle here, boom, and then all this, and then this morning, even the last 24 hours, when you include this morning compared to Friday's trade, basically split along that 219 level. So it seems as we've kind of have some magnetism there.
Yeah, it's really helpful to check out these points where price keeps stopping over and over again, because even if it is something that gets breached through, it can still become, old support can become new resistance, and vice versa. It happens frequently.
Okay. All right, so ADP with a pretty negative note out, not the worst looking chart out there, maybe just kind of stuck for the moment. Certainly
Jamie,
one to
maybe
watch, though,
still in
this
this
week is we
kind
get
of
a ton
channel.
of employment data, including the ADP report.
That level might be a little
the
lofty.
namesake.
This is maybe
All right,
more
last one, Wolf Speed.
close
Let's go
to
into
it.
tech. Let's talk some chips.
Around
cut
here.
Renita.
Yeah, cut in the chips, right? So the company was
Buy back
cut
to
by
VWAP.
Citigroup,
GME is
and it downgraded
bullish on the
this
hourly,
stock
green over the
from
9.
a buy to a neutral, cut
be
the
a good
price
dip buy
target
on
to
SPY, though.
$66, down from $95. That still suggests about
Low
a
down
5%
Bed
move
Bath,
to the upside from where it's
35,
trading now.
38.51.
But the analyst is sticking
Big
to the story
hugs,
that
hype.
we saw a bottom in the semiconductor
Thank you, man. I appreciate
equipment
it.
group back in October.
What is that, a hippopotamus?
And that said, he believes
That
that
hippopotamus
the easy
hype?
money has already been made, and this
Thanks,
cycle
big
now
hugs.
enters phase 2. What is phase 2? That's the point where Citi prefers equipment component makers to the consumable wafer start
Had a good weekend,
driven
man.
stocks. And while we're looking at this, Citigroup still remains positive on
Yeah,
the
I think,
growth of the silicon
I'm hoping that
carbide semiconductor
the runners
market.
end of last week, those
This
small caps
one,
are
not so much
get a
because
continuation
it
this
worries
week.
that other electric
Hip Hop
vehicle
Anonymous?
makers
Hip-
like
Hip Hop?
Tesla, they will follow Tesla's lead
Hop
in offering
Anonymous?
lower cost EVs and then switch out some of the equipment that they need to use, or possibly the chips that they'll need to use as well.
I
George
guess
mixed
when
with
we've
Ice
had so
Cube.
much
Just a
semiconductor strength and
great
tech
combination.
strength, when the stock's at the low, kind of tells you all you need to know right there. If you're an analyst, it's you know, pretty discouraging to see that. So the idea to cut it from a buy seems fairly appropriate, given that they were kind of on the wrong side of this. Especially in the context,
yeah, you were
it
looking
doesn't
at
sound like
BBY.
they're super worried about the industry necessarily, seeing the cycle
It's
low.
38 cents.
Right, the cycle that it's in, you're right. And
Why you give
maybe
him all the
perhaps
easy words?
automotive industry, not necessarily
You
the
cheated.
Chip industry itself, just like you said, but it's the automotive industry in this
I haven't seen that movie in
sector.
so long.
True. Okay. Wolf Speed, though, not a great looking chart, Rick. We're going to break down further.
Jim Ritz would look at it. Yeah, we're not looking at it. 38 cents.
And
I'd say 35 is your bounce. Not your bounce, but your support.
But even before
Until
any of this
it's
stuff
not, it's
happened,
30.
we have been having
Getty's
trouble
holding up
getting
this
above
level.
that yellow 21-day
It's a little 10%
exponential
move.
moving average since early February, kind of just trending downward
HKD,
since then in a falling
most stable
wedge
stock
type pattern.
out
Now
there.
this pattern can be regarded as being more bullish, but really it kind of just depends on which line it crosses
This
beyond.
Wolf?
That's when you look for the breakout.
Never heard of
here.
Wolf.
The $66 mark, that price target, seemed like a reasonable point to start looking for some resistance. It's around where we bottomed out here and topped out here. So, you know,
About a
we've
little dip
also
buy
got
here on
to
the
consider too.
ES
Look at
futures.
how much congestion we saw around this area. We
a lot
were
of
really,
congestion.
really kind of just on the verge of crossing below that
Wolf Speed, what
downward
is
trend
this?
line there. And it looked like we were going to break through it on last week, but we
Bulking
recovered
silicon
and made our way
carbide.
back above it. That's also the
Gallium
boundary
nitrate?
of the value
Nitride?
area right here, the area where 70% of the trading has taken place between these two thick yellow
Something with,
lines. So, I mean,
chips?
if we break through,
Fast
look
charging,
for a test of
5G.
the 58 level, that's our yearly lows. To the upside, we got to get through the yellow 21-day EMA near 65 and these lows near 66. So 65,
7
66.
bill market cap.
Rough looking chart. Nothing good here this morning, changing it down 4.5%.
Yeah, EVTL got a little
thanks for the
squeeze to the
chart. Thanks for
downside
the
there. Ooh,
analysis.
11%.
Rick Ducat coming up. Let's
Yeah,
get an
that
update on
sucks.
Tesla.
That's kind of
Shares
that. I
still
wanted
under
to
some
hold that level
pressure.
at once.
Down more than
186.
5% right
See it
now.
fighting for it. Yeah, I kind of just got. Maybe I should have to zoom out on this one and, you know, notice that it's just in an uptrend. SPY moving down there. There's a nice bounce on that level. Moving down below VWAP. MU is bounced pretty good from its drop this morning. Only down 1.8 now. This one to keep going. Down. CB down pretty good. Ubo down 3.3. Wish down 5. SPY's moving down. Birds 6.5 down. Solid RSI divergence, but this thing got squeezy this morning. Nine's even coming down there. SPY's getting pretty big candles, pretty big red candles. You may not flinching too much yet. OPEC cuts risk, exacerbating strained market, pushing up oil prices amid inflation pressures. Global oil markets were already set to tighten in H2 of 2023, which with potential for substantial supply deficit. The cost of attending Ivy League schools, including tuition, accommodation, and fees, is pushing $90,000 a year, with 4 years of attendance potentially costing more than $300K. Still moving down. Eyes up 0.07 on the day. It's 10 minutes to 11. Thanks guys for your likes. We're at 29. There they are. Yeah, GNS gave up some of the gains, still up 8.5. I might look for a dip buy, not necessarily a dip buy, but I might look to go long on this once there's signs of reversal. How squeezy this thing can get. Oh, 30. Thank you. 30 thumbs ups. New low there on spot, not new low, but yeah, new low on this downtrend. It's almost red to green to red. Oh, SPY flashing red. HST. How does it move with the market? What's the beta on it? You know what I mean? Like, this looks like it's moved with the market pretty much. On the shorter term, yeah, it's turned around, but trend is still there for sure on the daily chart here. Not really necessarily a resistance. 16.5. I mean, I guess maybe somewhat. You could take profits here though and wait and see, or just hold through the volatility, hold through the low. Has some gaps there, but I don't think those necessarily fill on this drop. 1610 you could look to for support. You know, see like here on this rally, we had 4 or 5 days of just consolidation before it continued. Not to say that's necessarily happening again. You know, it's possible you're in this trend right here. Came down, you caught the bottom, bounce, now it's consolidating before it comes down again. So BBY inversing SPY. Maybe little green candle there on Bed Bath. 37.31's a low. That 38.51 down almost 10%. Yeti holding up well, 10%. Rubo down 5. Done that before. I just got to like a bunch of plays on Friday for some reason, and they weren't necessarily the right time to get into them. But then I got out of them too early the next week, and they ended up all still working out. So or ride some of these plays I open. Unless the SPY just starts really showing a top. There's Micron. There you go. Move down with the SPY. Don't be shy. CB, same with you. I have 1-1 and it looks for an upward channel. Yeah, I liked it. I like that it bounced here. Got a hold though. Hit this line for 187. So. Looks alright. Oil, I guess it was up 5% still. Dollar's starting to rally with this drop on SPY. MCOM really down 20% today. Ooh. GME is now red.
So, on a shortened week, jobs number comes out when only the futures market's open. So it's going to be a choppy week.
Oh, that's a good point.
Nothing else.
Yeah, Friday stock market's
start
closed.
to
Futures
see,
will be open.
Some of the demand destruction potentially coming through. I think you have to say, well, maybe the market's right and the Fed's not, and that they're going to. Demand really dries up. They may have to do things to stimulate the economy, and that could come in the form of rate cuts sooner than the Fed is telling us about right now.
Okay.
The bath down 10.8.
Cuts still
38
in
cents.
the market, but stocks selling off anyway. I mean, that would kind of be the novel thing, Joe, it seems, is normally that's like the market's only very myopic concern. If those cuts stay in and the market sells off, then we're kind of in a little bit of a different regime.
Yeah, no, I think we covered it, a couple times, Oliver. This idea that this is showing a potential slowdown in the back half of the year, and maybe it's pulling forward a little bit. Not only was it important when you look at that ISM manufacturing data, we talked about the new orders, but when you also look at kind of what that says. I mean, if you think about this from a universal standpoint and say, okay, what does this really mean? Well, credit tightening is causing a slowdown for not only consumer demand, but it's also these are goods. These are durable goods. These are goods that are bought on credit, and that tightening is really pulling back the consumer, and in this example, business's ability to get that credit and to want to have that credit to purchase these goods. If that's the case, what does that say for the potential for expansion towards the back half of the year? I just don't see it. If you're already starting to see this slowdown, and remember, new orders is what we call a leading indicator. You're starting to see that on the new order side. I think that's pretty telling for
bounce is
what
really here on
the
SPY.
demand environment is looking like in the business and the consumer sectors.
Yeah, true. Okay, the kind of forward-looking metric there within that ISM. All right,
Getting close to the
VIX
open
19.5 right
area.
now, still pretty low compared to the past year.
We're to open
And it's just a day of
408.88.
unwind. General strength has been the tone the last couple of weeks. So we'll see where this goes this morning. Thanks for setting up the framework for us, Nick Didirakis and Joe Mazzola. I am Oliver Rennick. Thank you for joining MTL. Trading 360 with Nicole Petalides is up next. I'll see you this afternoon.
Goes down 6.2. Bird's down 7. Dang, man. We're getting a morning run on this thing. EVTL bouncing on that 187, that's pretty good. Bubo bouncing a bit, still down 5. CB not bouncing. Fine, moving down more. What a spiky day. Up and down. There, GNS gave back. It's only up 5%. Now, from its, I think that was like a 10, 13%. It did. It was similar to birds. 21%. Did 21% today. Now it's up 6. Isn't increasing slowly, the BY volume? Isn't increasing slowly. It's increasing fast. I mean, volume doesn't just mean the stock's gonna go up. Go either way with volume. I kind of getting down here to open. Yeah, it's bouncing. A little green candle in SPY is basically ready to open so far. You've got bid support on Bed Bath at 37 cents for 25,000 shares.
Up $17.50. Getting to Bitcoin, well, 28,180, pulling back almost 2%, and the U.S. dollar pulls back at 101.86, down 1/3 of 1%. For a look at some of the top moving stocks in today's market, I'm joined by Jenny Horn, markets correspondent here on the TD Ameritrade Network. Taking a look at Tesla under some pressure today after the delivery numbers. Tell us a little about it.
Yeah, delivery numbers not able to please the street, and I think the bar was very high, but there is some thinking here, Nicole, that now Tesla is becoming once again boringly expensive at current levels. And they did disclose their first quarter delivery numbers on Sunday, producing just shy of 441,000 vehicles and shipping then almost 423,000. Now the latter number was 4% more than the previous quarter and 36% more than the same period last year. It did also mark the third consecutive quarter of expanding sales following a very difficult second quarter in 2022 when it was hit by these COVID-related lockdowns, especially weighing on its sales in China. However, Tesla kept its growth on track only by cutting the prices of its vehicles, which is something we've discussed really since the start of this year. The price in the U.S. of the long-range Model Y is about $11,000 or 17% lower than at the start of this year. So in China, the same vehicle is also 21% cheaper than in September. Furthermore, production then did exceed deliveries by about 4%, but about half of the previous quarter's mismatch is still pointing to these rising inventories. Tesla has also doubled down on its original mission to grow as fast as possible, never minding the cost and the deteriorating sales and the way that can impact the company. So I do think there's things within these first quarter delivery numbers that gave the bulls optimism that they're seeing consecutive beats. However, the bears could argue that their margins are going to continue to take a hit, and I think the street is still left wondering at what cost will this company continue to grow, given the fact that they are so frequently reducing the prices of their vehicles, Nicole. So shares are lower in reaction, down about 6%, and Tesla's still up about 98% from its yearly low, a really amazing rally we've seen in Tesla shares, down about 50% from its high, and still up, and an outperformer on
slow down
no
its
doubt,
retreat.
but definitely seeing a sizable move lower
Basically
today.
at open here.
Yeah, understood. Okay, thank you for that.
GCAT.
And then we're back to the layoffs
6.
talk, and in this case now it's for fast food giant McDonald's. What's the latest there?
So McDonald's, and this is shocking to me because you'd think, given some of the overall macro headwinds and headlines we read, that
literally point a spot. Yeah, it was
insulated, given the fact that they serve a lower cost or lower end consumer, and they marketed themselves very well in that way. But they should
have done at the bounce, but I'm still kind of trying to read what was going on.
They do prepare to inform corporate employees about.
I'm trying to see how it was taken by the market because stock's really weird and seems weird stuff's going on. So I thought maybe this would be a really bullish thing. They're doing a 3 million share offering.
The fast food chain did say
at that point, I didn't even know that they were canceling all their other stuff. I thought they were just adding this on to their preferred shares and warrants and that whole deal.
They should be working from home Monday through Wednesday.
I waited a little bit, but yeah, it actually bounced to 0. But yeah, it's like coming back down here once it's getting back to lows.
To cancel all in-person
that's where I closed.
And outside parties outside of its headquarters.
Why?
So
I guess because the share offering
news, obviously not
and
what
it's
you
breaking the
want to hear if you're a
level.
McDonald's employee and a company that employs so many people. This is such a massive
they
restaurant
freaking
chain.
released it like right at pre-market.
McDonald's shares acting accordingly. Typically, we have seen stocks that announce this layoff or restructuring.
You can see it here, like they're released like right here.
Up just shy of 0.5%.
Came down.
So the street does seem to like
and it bounced. I'm like, okay, maybe it's
Nicole.
I mean, that's usually bearish news,
Thank you for all of that.
but maybe that would be a good thing.
At the TD Ameritrade Network. Let's get some insights in the news shaping the markets. For that, we welcome in Howard Silverblatt, senior
once it kind of settled
analyst
back
at
down, then I
S&P
was like,
Dow
all right.
Jones Indices. Good morning to you, Howard. New week, new
I didn't know enough that was going on either. Like,
it's
just
2023, though. A lot of volatility,
that to me canceled a lot of
stand now?
speculation that we had.
Right now, it's going to be back to
like,
fundamentals.
why do they need 300 million more shares
or
more dollars in the share offering?
A lot of reports coming
that,
in.
Like, kind of threw stuff out.
And more importantly,
for me that
employment on Friday next week, CPI
bullish on.
and PPI will be.
And then just from a technical level, like
all those items should
breaking that level is a pretty easy, just technical level to say it's broken support. So
and that's going to be the major banks. The first one will be Thursday's First Republic Regional. Which obviously is taken aback in the market, and then of course Friday,
I know, yeah, it's kind of a
Morgan City,
kind of a crazy. Yeah, you were busy that day. I mean, not just this is all hindsight. Like they ought to cut out and it would have rallied 100% right then. I would have chased it back up. So
but we did see it for
you know,
most
there's
of,
no way I knew I was going to be right,
March,
of course.
before and
No
after
way
the
people should just
market
follow my
event.
trades. So
So again, back to fundamentals at this point in time.
I didn't necessarily have a plan to cut if it broke that level.
So as we get
I talked about it more to the upside because that's kind of what I was expecting and hoping was it was breaking the upside, and then I thought maybe I'll add. But as I said, I said if it breaks that low level, like, you know, it's going to be more downs. The fact that it broke it with this bearish news of the share offering just definitely supported that it's going to come down. I wasn't anticipating it's coming down this much, of course. I might have bought puts. No, but
of it, even though they're much larger in there.
Yeah, this
we'll be looking at the guidance,
this much of a drop,
which will be critical going forward. How a company is going to be dealing with this? What are
so just like when we were here, I thought it would rally back up to $1 pretty quickly whenever it did.
Still expected to be back.
We'll see where this thing settles down. Probably getting pretty close, I would imagine.
Reducing interest rates in the second
same
half,
deal. This will probably rip back up to 80 cents pretty quickly. Like that should be a pretty easy move for it.
As much as the historical actual Q1 earnings.
But it really depends on how low it goes first.
I mean, do you think a lot of people are beginning to bank on a rate cut later this year? And what would really drive that? How likely is we will see the drivers?
Yeah, and that's where stop losses are nice. I'm using stop losses more and more. I started using trading futures, and
need them. You don't fight the Fed.
I've been using them more on holding shares too.
The dot matrix obviously,
because I can't, especially if I have more positions, I'm not like
but you wouldn't expect
paying attention to all of them.
Early of indication at this point, but most of the street is looking towards a reduction later in this year. Some of the bets obviously are starting, if you use the futures, in June. But that does seem a bit early to us. We were expecting a quarter of a
But yeah, I mean, it is crazy how much it's come down. So
the Fed does
where I closed,
depending on the data, again, there's a lot of
I
data
could
between now and
buy
May,
back
and
in
even more when you start going in there.
And double my money to get it back to where it was.
It does seem to have pegged in,
which is wild.
A reduction starting probably sometime in the late third quarter.
Right. It's come down.
Economy goes through, and that should
come down 50%.
Significantly help support the market. PEs are very high right now.
Yeah, back up there, it's 100%.
Have come down considerably.
So I can make the play free to get back to where I sold it out at.
So, in street terminology, they've declined enough that we'll be able to declare victory and a beat of estimates.
It's hard to, for me at least, like I have to remind myself, like wrap my head around the prices and what percentages still mean, because even at 30 cents, 40 cents, 50 cents,
the S&P Dow Jones indices,
it's like, oh, it's so cheap, but it can still move down many percentages. That's why that one chart I shared on Discord is just crazy. I don't remember what it's called, like the rule it's called or whatever, but declining percentages versus like increasing percentages.
Market. Those two companies are dominating.
I mean, you see it right here. So 50% down takes 100% up to get back to where the 50% down was.
For the quarter, definitely getting more time.
And just as you move down,
not to a dangerous
there's
level,
a name for it. I can't remember, but
keep an eye.
I looked at it with my birds position. It was like
compared to previously.
Okay, so from here it's come down 95%.
Equal weights and small cap issues. Q1, the one takeaway was that in financial difficulties,
for you to get from here back $7, it has to go up 1,800%.
You want to be larger cap than smaller cap, and that's expected to continue. The big caps have more resources; they have the ability to borrow and
more red,
much better. Especially
there's a low on the day for this SPY,
as well as contracts.
Immediate sell off also 1.2% down now
cap at this point going forward.
Yeah. And what about some of the other elements that we watch closely? I mean, we've been seeing oil running up and how this might be, you know,
I should maybe do it. What do I have?
Headwinds for the economy, a credit crunch too, that Jay Powell has noted may help with monetary policy so that he won't have to raise quite as much.
I don't know. I don't know if I want to hold it if it breaks this or
I'll
not.
take the credit part first. Definitely, we're expecting to see a slowdown in.
It moved. I don't know what it's in now.
Looking to do less.
BBBY.
Banks will have more stringent rules, even if they don't come into play.
Technically, I think it's a penny stock under $5. $5 under. So it's been a penny stock.
Whether that be commercial, residential. So we expect a slowdown there.
It's not in the pennies until it's under $1, but
the banking situation definitely took a toll and tightened up credits. I mean,
so it has to be over $1 to be listed, to be in compliance.
A quarter of a point or more impact. So that's done some of the job, and that's part of the reason the street is looking for the Fed to slow down and not
like I've said,
stay
there's
at
a
the
lot
high
of
rate
time that can go by where you can be under $1. You can file extensions.
Was, over the weekend, the 1.2 million.
They let stocks trade under $1 for a long time. It's like 90 days under $1
last October,
without a single day over it.
Somewhat,
I think, and then if you go one day over, it resets the clocks to another 90 days.
In trading here for futures,
so that can really push it a lot. And then of course, if you reverse split, that's why stocks often reverse split just to get over that. So there's a lot of options. And then if you fail all that, you can get an extension.
Go back a month
and
so
they usually always
that's
that extension.
Hit some headwinds going into the economy. Going in, it will not help inflation. With Fed uses more the core number, which excludes food and oil, but the general consumer is going to feel that. It will not take long till we see it in the pumps.
Yeah, and we'll watch for those jobs prints this week. It's amazing. I'm not used to a jobs report coming out when the market is closed, but that's exactly what's happening on Friday.
Yeah.
We'll get our monthly jobs report. I mean, it's going to be so weird, Howard. I mean, I'm going to be sitting there glued to the TV trying to figure out how to interpret this. We're not going to be able to have our conversation, so we'll have to hold it all till Monday. Howard, thank you.
You'll be looking at foreign markets.
Or just the futures.
And I will be. You're absolutely
I think futures
right.
are open on Friday.
Howard Silverblatt, great to see you. S&P Dow Jones Indices. Thanks for being here.
Thank you.
Plenty more to come right here.
Sounds like your uncle. Your uncle from like New York.
Some of the top stocks that you might want to watch in the sector. And today's disruptor, Wolfspeed. Kevin Green will break down that stock and a way to trade it. 360 round.
We talked about Wolfspeed. Boston. News about this. Yeah, they cut oil production. So they have control on basically our economy, since we don't produce enough of our own energy, and we decide to save the planet by not producing oil, and we decide to let other countries, foreign entities, produce oil and destroy the planet, supposedly, and we'll just pay them whatever they want. So when they cut their production, it just totally puts basically our entire economy in their hands. And yeah, inflated prices, oil rips, everything gets expensive.
How are you feeling about the markets on this Monday morning?
Well, I think it's really interesting, and I'm preparing really for the upcoming earnings season. I want to see if tech is still going to dominate. And
you got to talk about free energy. You're talking about wind and solar.
I came on looking to see how often tech beats on average quarter over quarter. It's actually 80%.
That's not free though.
Which gave me a little more.
That has way more cost per energy.
That tech will do exceedingly
for the amount
well
of energy
and continue
you're receiving
to lead the
oil.
overall indices.
That's actually a great stat. That being said, let's get to an old school name, and that is Honeywell. Not really tech, but let's get to it because I know you're watching this one closely.
Bouncing here, so that's
$792 today. What is it
at
that's
the open.
grabbed your eye?
No, it's actually bouncing on that pre-market level.
Yeah, so for Honeywell, I was looking for something, of course, with some broad-based revenue exposure. And this does go onto that key theme of aviation that we've been talking about. And they have that aviation theme exposure from a revenue perspective, both commercial and aerospace. But even more so, they have industrial revenue exposure. And that also is inclusive of energy efficiency, which I think is going to be an emerging trend throughout 2023, even to 2024, and so on and so forth, especially as the narrative of oil prices increase. We see that shift to clean energy. And of course, any type of exposure to that is certainly helpful. From a fundamental perspective, trading has a 22% profit margin, which is extremely important when we think about a restrictive Fed. They're trading 18 times next year's earnings, expects about 5% revenue growth and 10% EPS growth. So it looks actually pretty well priced in comparison to the overall broader market.
Understood. All right, Rick Ducat, bring out those charts. Tell us what you say.
Well, gladly. We're down about 13% or so in this game since we hit these highs for the year back in October. Downward channel since that point. A few excursions here. We had a bit of a false breakout in this area here, but we quickly reverted back within these boundaries here.
E-Trade's really lagging.
We were breaking out to the upside. We're still above this upper trend line, but it was looking a lot more promising earlier today. However, we are still above our yellow 21-day exponential moving average. That moving average itself is starting to shift from a downward slope to a sideways slope, which could be a sign the trend is improving in the short term at least. RSI was also looking better a little bit before we had this slide in equities here today. We were above that 50 midline that demarcates bearish momentum from bullish momentum. So what we'd really want to see here for the bulls is a strong close above the trend line and the 21-day EMA, as well as a push above that 50 level in the RSI, which would kind of give us some better confirmation for the breakout here. Support and resistance, 196 to the upside is our orange 63-day EMA right about
It'll probably come back down.
That would be a pretty logical point to start looking for some potential resistance. To the downside, 185 is our green dash line. That's about where the move started to stabilize back a few weeks ago, and that's also the edge of our value area on our volume profile our volume profile study. That's where 70% of the trading is taking place.
If you look at engulfing candles with the wicks, that is an engulfing candle that's bearish.
Into relatively thin trading relative to the rest of the chart.
Right, understood. Okay, so but it has been in that, to your point, down off the highs, down 10% this year, Jessica, but you do see this opportunity. So when it's trading 191.86 today, where do you think it could be headed in short term or longer term?
I'm not changing my order.
So I don't want to specify a price target on that specifically, but I do want to point out that shift to a bullish divergence or that trend and that base forming is what I'm looking for. So I see a lot of upward momentum based on those revenue expectations, which again was 5% and 10%, which is better than its category. So that tells me that from a fundamental perspective, it has upward momentum.
Right, understood. And when you think about the S&P 500, do you think that has upward momentum, Jessica?
Nice
it
tree.
does
Well done,
if you
man.
pull all of the fundamental data. There's been a lot of slashes in earnings, and when those slashes in earnings come in, the market then prices it in. So it already is kind of expecting the worst from a year-over-year growth perspective. So I think there's upward momentum if you think about the percentage of beats and miss and being upheld by technology. I think we're testing a lot of key support levels and forming that base. But my bigger picture, I guess, to answer your question very, very directly, is I expect us to be range bound until we have a catalyst that will send us either way. And that catalyst, of course, could be something from the Fed or a better than expected earnings. And I expect to have a better than expected earnings, at least for this next round.
E-Trade's like
Okay,
lagging
let's
bad.
get to Occidental Petroleum, which of course has been running hot, and then once everybody found out how much Warren Buffett loved it, it ran even higher. And wait, did it again, another addition just recently, another SEC filing where we're finding out more enthusiasm for Berkshire Hathaway and Occidental Petroleum. But people do love this name. Tell me a little bit about your thoughts. It's around $65 today.
Yeah, so first of all, Warren's his investment philosophy is something to be cognizant of and extremely important, and he's the reason why he's one of the best out there. So if he has anything that's his pick, it's something that we should take a look at, because he analyzes things all the way down to how many paper towels do you use. So an attention to detail is extremely important, and I certainly appreciate that. This caught my attention due to the increase in oil and in WTI. I think there was a foundation around 80 and was expecting some support or breakout there, and those production cuts was that perspective or that catalyst that was needed in order to have that support. Oxy was something that I was staying a little bit away from because it was already overhyped because of their profit margin pressures to have projects and so on and so forth. It's already done its run up. However, the pros outweigh the cons when we account for higher oil and subsequent gas prices. And this also has a really great profit margin, about 30%, pays a dividend, which also goes through Warren Buffett's likes. So it really checks all the boxes, and that oil production cut and sending oil higher is what made me choose to go ahead and pull the trigger on this one.
Right, understood. And well, boy, the move we're seeing in oil today on the heels of the OPEC plus cuts, that's something we're going to be talking about without a doubt today as it hits 80.
I knew I was chasing that
what
one.
are you watching for Occidental Petroleum?
Pretty abrupt reversal of fortunes for this name here, because we were trending down in a downward channel here for several months at this point. We're also down about 15% from those yearly highs, which is about where we started out this downward move here, quite close to that point. But things were looking fairly good. We broke out to the upside. We crossed through several technical indicators. All three of our major moving averages that we follow are yellow 21-day, orange 63-day, purple 252-day exponential moving averages. We broke through all of them within the span of the past 2 weeks or so. We also broke through a resistance mark that I noted. This green dashed line here near 63 was a point about where price bottomed out and then topped out. And then we topped out once again there recently and broke through it finally. We also broke through our volume profile point of control right here. That's our area of heaviest trading during the past year, so that can be a point that acts as support or resistance as well here. However, we did take a bit of a breather here near the 66 level. This pink dashed line here, that's around where we had our topping out from our previous rally there, our old good best high close there. So 66 to the upside, perhaps 63 to the downside could be some areas to watch going forward. Momentum is looking fairly strong though here, still trending upward with price sharply above that 50 midline here. It would be great for the bulls to get into that overbought area above 70 and see a breakout above the 66 price level concurrently. That would add some greater credence to any kind of bullish move upward, but we are definitely fading a bit from the highs of the day so far.
Yeah, I mean, it's surging 4%. I mean, we know that names like Exxon and Occidental Petroleum have been surging today. You could add Marathon to that, as well as oil hits 80, up about more than 5% for oil itself. Final thoughts here, Jessica, on this name. Also, don't forget, we talk about the dividends, and I know you know so well, all these energy names, often dividend payers get paid to wait. In addition to Occidental Petroleum, 1 year, it's been a big mover here. And what happened to the 100% moves? What happened to that? I guess we passed that. I was thinking I was going to see 100% moves, but that's long gone, I guess. Final thoughts.
Yeah, dividends are important. It's important to have diversification, and part of that is the energy sector. So it's just watching the moves in oil and production cuts and where that goes.
Yeah, understood. Okay, so let's talk about your last pick here, and that is Adobe in the world of tech.
That in a bit.
And this name, 380 today. Where are you thinking?
Yeah, look at that bull flag on the hourly.
I am. So I was looking a lot at the AI sector. As you know, it's something I've talked about quite often, because really I just find it astronomically interesting, and some of the developments that are there are amazing. But I'm looking there, since it is overhyped, I want to find something that perhaps is positioning itself utilizing AI that would have a breakout of some sort. And I want to make sure that it also solves those really large macro headwinds, which is the tight labor market, and turns those into tailwinds. So that's where Adobe really came up on my screening and looking at that factor. Adobe was last week, had a big conference where they released some of their new AI products, some within the digital products, others within journey map and optimization, which is something that would really help a lot of companies from an efficiency perspective. So it checked that box from the way that I'm looking at production enhancements, if you will. I want to see higher production, lower labor costs, and that's what Adobe is working towards. And that they have got a huge funnel growth and exposure to that because they could offer payments towards bigger enterprises as well as individual consumers. And so that also helps with revenue growth and expansion. From an earnings perspective, 22 times or around 22, 21 next year's earnings has higher EPS growth, higher revenue growth expectations. So I think we're going to continue to see this one push higher. Even had a slight of a pullback today, just due to what they're investing in, healthy profit margins and revenue expectations.
Right. Okay. Look,
unless it's just going to bounce on this downward trend line.
Look at the chart.
Sure, we're up substantially
Could be doing
from
that
our
from
yearly
that breakout
lows that we saw around this area back in September. We're up about 39% or so from that point. And the 385 level that we were near yesterday, this red dashed line right here, was an important one to me because we had this breakout action right here. Kind of a cruel move here because it looked like we were going to break above the purple 252-day EMA. We were pushing back above those old highs from late August, early September, and we collapsed pretty significantly there. Took us all the way back down to the bottom of the channel very quickly here in the matter of a few weeks. And we are finding ourselves resurging here. We're back above the purple 252-day EMA once again. Kind of a quiet move above it, though. We didn't really have a big, strong breakout. And we're also stopping at that 385 level once again here, which was the top of this range that we started to establish. So not really getting the kind of breakout that the bulls would want to see just yet here. So going forward, RSI, just keep watching that. Keep watching to make sure we don't get any kind of divergence in RSI trending downward while price is trending upward. That would be a potential warning sign that this move is perhaps not going to make it above the resistance that we've established here. If we do make it above that 385 level, look to the 396 level right here, this pink dashed line. That's around where we topped out in the past.
Give me down 1.5.
And back here as well was near that point. To the downside, look to see that we hold that purple 252-day EMA near 379 today.
Up.
If we don't, look to the yellow 21-day EMA, which
MCOM
is
is usually not in my top
for some additional
15 on my watch list.
Yeah, and I'm glad that we brought this up. Those were great charts there, Rick. Thank you for all of that because we've seen this recent run up in Adobe. You know, it went from $274 now it's at $381, so up almost 40%, let's say, in 6 months. Jessica, thank you always for being on the show and giving us your thoughts and your clarity. Final thoughts on Adobe or a big picture?
Oil's rallying
I say
here.
Big picture, what's really important as we go into this upcoming earnings season is just to see if tech still is the leader. But even that AI front, I want to know if the consumer demand that we all have been expected now that this last quarter was AI frenzy, what are they going to say on the earnings call? Where are some actuals? Give me some revenue numbers, and that will give me some more comfort within that sector.
Maybe found a little bottom here.
Then you'll have more clarity there for sure. Jessica and Skip, options
green over the 9.
Rick Ducat on the
Bullish
charts.
MACD.
Thank you both very, very much for the big three today.
We make a little invert head and shoulders on the 5 minute.
Spotlight Biotech. We're
Got a VWAP move to 40 cents.
Wedbush is here with me on set to take a look. He has some names he likes.
Level.
And one he's shorting. You'll want to hear more about it coming up.
I don't have it on my watch list, but I have looked at it from time to time. It's actually kind of an interesting stock. I'll stop jinxing it. Okay, BY is going to come down. 35 cents is definitely next level. Yes. Oh yeah, the Tesla delivery numbers were bad. Well, it's moving up here. I didn't get my long because E-Trade. Thanks, E-Trade. The majority of Americans now think getting a college degree isn't worth it. The new poll says from Wall Street Journal. BlackRock says forget about rate cuts this year. Just forget about them. White House says we don't think OPEC production cuts advisable given market uncertainty. Made that clear to OPEC. U.S. will continue to work with producers, consumers to ensure growth, lower prices for consumers. White House was given a heads up on OPEC move. We have every intention to rebuild strategic oil reserve. We're going to do everything we can to get Wall Street Journal reporter Paul Whelan out of Russia. Huh. GME is actually looks like it's kind of bouncing right on that line we have drawn. Bed Bath. Still just right there. Bullish trend on the 5-minute. Getty holding up nice above VWAP. Birds is down 10.5. Looking for it to find support here. 2340. How do I have that level? I get moved. Oh, that's kind of that pre-market. Yeah, I see it. So we'll see if it finds support here. It did have a RSI divergence on the hourly, which is bearish. I've got the bearish MACD right under the 9 moving average. So coming down for now, but still a nice uptrend. Just see where it finds support. Stuff in all BBBY and Bright. Because other back holders are holding. Jeez. No, it doesn't make it weird. It actually makes it pretty normal. The peer pressure. Staring at legless whores? What the heck? More than Soviet Russia. Yeah, it's kind of interesting stock, Rolls-Royce. Had some crazy catalysts. I remember seeing it move quite a bit at times. Still climbing back up here to VWAP. Same with GME. Bat down 10.3. Birds 11.6. EVTL, nice bounce on 1840. Upo down 5.8, up a little bit from its lows. MCB is coming down. My spread's now green on that. Wish bounced a bit too. Down 4.25 now. BNS holding that 6% in range.
They're currently trading at $2 or below. They have about 2 years of cash. So we can expect some contraction in the space.
Yeah, I heard they
forward.
changed the split from up to 120.
Mergers and acquisitions. I mean, maybe they'll sort of collaborate.
Yeah.
A lot of people like to buy the ETF. I don't mean to jump in, but you know, people look at the ETF. They like to talk about pharma and biotech, particularly with an aging America. And there's a lot of people who, when they look at this volatile market, they turn to something like pharma, big pharma, or biotech, because they think that regardless of the economy, it's an interesting and maybe somewhat recession-proof.
There's a reverse split mover. See,
you tend to agree. Last year, there was a couple of names that we covered.
Thank you, Ace. I appreciate it. Ace gifted a free membership to whoever wants to claim it.
Even at the
Your
beginning
name
of
is
the year, another
great.
company that we
Tainted,
covered,
Trinity.
They got acquired.
Great. You can get a free membership.
So obviously a lot of people are attracted by the M&A prospects and biotech. When we talk about contraction, to some extent, we're talking about some of the companies that may be struggling for cash,
but yeah, look here,
don't have enough to get to a pivotal catalyst, that may need to raise additional money, and so they could become
this had to move up.
Merger
I'm assuming this was the
etc.
catalyst for why it rallied.
That's on the kind of smaller cap side of things. We think in a challenging environment like this, later stage companies.
This one started 27 trading days, which is quite a while.
You know, with strong balance sheets.
I mean, the bottom was
late stage
really
assets are probably going to fare better.
So it kind of started maybe here once that volume kicked in.
Yeah, about 2 years.
Probably shorts closing or something there. And then
you know, or if you have debt and you have to
9
sort
days.
of refinance that debt and somehow
basically
you
of
have a higher
ups,
rate
and then
environment. It's
once
just
the split came, then it came down.
Right now,
But
there's a lot of worries about the credit crunch.
That was a 1 for 40 split. And look at this, even now after, it's getting a huge move. I don't know if there's catalyst for this or not.
Some of the names that you do like. You have Ascendus,
maybe just
Verona,
AI hype,
United Therapeutics. Can you tell us
on traders alerts
about each one of these? Are these all buy rated
some momentum?
Absolutely.
Yeah.
You know, there was
something to do with
Ascendus. The stock is
reverse split
considerably. We note here, obviously, this was on the FDA's.
Well, you gave it your best
shot.
Ace.
Some deficiencies with their filing for TransCom PTH and hypoparathyroidism. We think that the sell-off today is a bit of an overreaction.
Is it a buying opportunity? Because right now it's down with 31%.
Yep.
Put this
is
in
it
the
a big
watch
buy?
list.
It's a big buy in our opinion.
Wow.
Little to go by from the communication from the company on the call this morning. Obviously, the FDA just sent them a very brief letter saying that there were some deficiencies with the filing. But that said, you know, amongst all of the kind of
curious
panic
when this,
or a little bit of the
markets close on Friday, futures are open.
Is to remember that you know, there was no request for safety information. There was no request for additional information. Those
now the sell-off on BBY before the split is
what would be called a major amendment,
more severe than one like this.
You know, for an extended period of months.
And it's already had this run up.
Once the trend started up,
61 to 134, then a gap down, and sort of right now it's at $73.
Yeah, it's actually a big move from earlier today, and we think it can climb higher here. There was probably
GME
some
reverse split
pressuring the stock in the morning. Maybe they're covering now. We don't think this jeopardizes their path to approval. It's just a minor setback here. You know, patients are actually still
really a flash wound.
There's an early access program where patients are still receiving this treatment as you know a part of that program.
And great people in here. I mean, you think it more than doubles.
I didn't miss that comment.
I mean, prior to today, we were at 195.
Able to grab
we're
it?
still there.
Right,
oh yeah, you might have to have your
from
YouTube account linked with
even if
the
it went to
Google account.
164.
Yes.
From 73 bucks, I think any person in America would be pretty happy.
So there's so the reason why we like it here, it's a pretty sizable market. There's about 80,000 Americans.
Would have been a nice dip buy on this buy.
Hypoparathyroidism.
Sure.
There's no current treatments for it. No like approved therapies. They basically just take supplementation. So this would be a big unmet need. We've done expert calls, expert surveys, resounding support from them, and we think that it indicates a rapid and robust uptake.
Okay. And then we have Verona Pharma, which year to date is down about 21%, off the $26 high. It's around $20
dividend date.
Today, what are your thoughts here? Why do you like this one?
So best performing stock, or one of the best performing stocks last year. They had 2 positive phase 3 studies. This is ensifentrine for COPD.
What's this thing usually do for
I think they rang the
activities?
bell recently.
Sell off after?
Neat.
This is a unique mechanism of action. There have been no
it usually
advancements in
rallies.
the COPD space
Weird.
in the past 2 decades. This is a dual bronchodilator and anti-inflammatory agent here. So we think this addresses a pretty sizable market. There are about 2.1 million moderate to severe patients in the COPD space with symptoms. And we think that those are who are on dual and triple therapies. And so we think that this is a product that is poised to really try to change the treatment paradigm.
All right. You also have United Therapeutics.
GFAI holding above VWAP, consolidating nicely up here.
Is BioMarin. So United Therapeutics is your long, and then the short is the other one, BioMarin. So to give us a few seconds on each one.
Yeah, so United, they're the leaders in PAH.
A lot.
Their treprostinil products did about $875 million
23
last
million
year.
market cap. That's
like
like
a new
BBBY right now, isn't it?
Extension product. There's Tyvaso and Tyvaso DPI. We think they end up growing the market.
No, 162.
It's a fantastic management team. As for
Overvalued.
BioMarin, I guess look, they're also been leaders in the biotech space for
UI's
a
coming
couple
down
decades here. We think expectations are a bit high on the
11%.
Roctavian product here. Their PDUFA got pushed back. They've yet to dose a patient after getting approval in Europe in August. They've yet to dose a patient. So we think expectations of 100 million this
kind of
year
ebbs and flows, but
unrealistic. We think this
there's
could
not good
eventually
trades,
be
like,
blockbuster, but not in the time
don't
frame
force
that
trades,
the
so
management
just
team
cash
has.
is a
So
great
we think
position.
about end of 25.
You're not
So you're
losing
thinking
it.
this one is an underperformer.
So sometimes 10%.
We have a $74 target.
50%.
Oh, I see.
Yep.
All right. So
Depends on how much you have allocated to like a
It's
long
great
term
to
and how
see
much you
you.
have
I'm
for a
glad
trading
you're here
account.
with us today on set. You'll
I
have to
kind of
come
spread
on
mine out
more
between
often,
Great to
'cause
be
this
here.
group is
multiple
a really
trading
popular
accounts and
group. People love to get the ETF.
an
Just
investment
a quick
account.
thought on buying the group. Are you a fan of ETFs and things, or you like
So
the
yeah,
names
definitely
more?
always try and have a cash position.
Stock picking is, fares better in turbulent markets,
Right.
but and the ETF has been in a consolidation here, but we do think that both are. At least buying the ETF is a good
Right.
opportunity, and you can kind of pair that with some specific names as well.
Right. Good, Andreas. Thanks for
there's
being here.
Thanks for
like an
Andreas
investment account where you're
Agudis
just
is with
basically
us.
buying and holding
Wedbush.
and not trading.
Glad you were here to talk about all these great pharma
50% is
names.
probably a lot.
Biotech in particular. All right, coming
However,
up
if
next,
you're
the disruptors.
bearish
Kevin
on
Green's all over this one.
the
He'll
market,
talk about Wolfspeed,
longer
the
term, and
semiconductor
as a
company. It
macro
was
look
downgraded
at
this
it,
morning, and he'll have all the
and
details
some
and
people
an
go
example
as
trade
much as
for us right
50%
here,
cash.
Trading 360. We'll be right back.
Some people sell their entire portfolio and wait, but
All right.
you get some timing market fallacy that plays into there too. So having a plan and sticking to it is a great plan. Oh man, the shares launch. Sounds like some super stock from 2022. Sounds like one of them boys got to you. No, it is true. They can loan your shares if it's on margin, which doesn't really matter. You can probably loan your shares anyways. There's lots of ways they can. Yeah, I wouldn't not do it for that reason. Good for about 2 years. Force, this one might keep going today. not a huge move, but it's consolidated really nice above VWAP. Setting up a bull flag. Covered call here on Corsair. I have to call Fidelity. I can't open stuff up. Done something wrong. Ever since I closed my BY position, they've been unhappy with me. Yeah, I can't. I might take a little short on here though. I got triple top going on. Quadruple top. Light little head and shoulders here too. Head, shoulder, shoulder. Options just aren't very liquid on Corsair. Oh shoot. I got more gritty with my fill. Got filled fast. Alright, I took a short there on Corsair. I did a May 15, 17.5 put debit spread. Could have just gone with a but without another leg. Oh, we got the little green candle that helped the fill. We're getting a bounce here, almost back to green. Not so for BBY. 11.7 down. MCB spread is green. Should I maybe close this thing? Yeah, I don't. It's too far out of the money. Not enough time. It'll probably come down, but I want to get one closer to the money with more time. It's weird. Yeah, maybe it's Fidelity doing weird stuff. I feel like mine's probably just margin. Yeah, Webull. I mean, for what you do, Ace, like Webull's legit. Just shares, like very simple, nice UI. App's nice. It's very powerful. Options, like it's a little bit limited on options, but you can definitely still trade options on it. Link is in the description. Yeah, it's got a whole paper trade. Excuse me. It's right here. So I actually set this up for options, but you can do just a total blank layout. You can do US stocks, paper trading. So, you know, where they basically set up the layout for you. They set up the layout for day traders, paper trading, and then options, paper trading. So kind of cool. You can't, there's default, customize. They don't trade, they don't have futures on Webull. But yeah. Bulgaria boy. I mean, Robinhood looks nice. It's not as powerful. Like charting on it's not going to be as good. If you want to start learning or getting into TA more, I guess. I'd say just go straight to Webull. But I think it's going to have multiple brokerages. If one goes down, if one's laggy, get a couple. Have money in all of them. I like to separate my funds anyways. Hide money for myself. The long-term stuff I don't trade, best, and then one account for certain types of trades, the other account for another one. But it can be kind of easy to manage.
So it's been a great story for Bitcoin.
But
Bitcoin
that's the thing, I'm
generally
not really
trades off of
managing.
its own narratives.
Try not to manage really any of them but
2020
one.
2021, we
Others
had
are
that
kinda just
narrative being a
passive.
store of value, digital gold, inflation hedge.
That's the point of it.
Last year,
Envoy
2022,
PT.
we saw
That's
Bitcoin
true,
being
yeah.
lumped
That's a good
together with
point.
other risk
Yeah, trade different
assets
accounts.
as financial conditions tightened during the
You have
Fed's
volume 100
inflation
million.
hike. Now, fast forward
Good price,
to
keep going down
2023,
and
we're
down.
seeing with these regional bank jitters that we're back to that digital gold narrative and back to a view of Bitcoin as a hedge
Yeah, a lot of
against
volume
the
today.
existing financial system
bad.
and fiat currency.
That's 61 million the first hour is wild.
As we take a look at this, Jason, I mean, what's your big picture outlook? I think Todd makes a great point here about how we've had this recent run up in the quarter. What are your thoughts?
Yeah, no, I think Todd definitely hit some really important points there. Yeah, I mean, Bitcoin has had one of the best quarters it's had in recent memory, obviously with a pretty horrible backdrop with the banking crisis going on now. The digital gold narrative or the store of wealth narrative, right? It's kind of like that outside money. It's not really in the system. It's like if the banking crisis and this banking contagion continues, like where am I going to put my money? Something that isn't really inside the system is kind of like a good narrative for Bitcoin to have. And I think you can kind of see that with the types of volumes that have been trading with Bitcoin, right? You've had a ton of spot volume over the course of 2023, and even more so just since the banking crisis has kind of started. We've seen a ton of spot volumes coming in, specifically from Coinbase, which kind of, to me, indicates people are buying Bitcoin and then kind of transferring it off, or kind of buying Bitcoin as like that, as Todd mentioned, as that kind of hedge against global fiat debasement, right? It's not really that inflation hedge as a lot of people have alluded to over many years. It's more of that debasement of fiat currency. It's a hedge against that. And I think you're kind of starting to see that. I think what's kind of important is also to note gold, actual gold, has traded as you would expect during this, right? It's got probably one of the strongest long-term monthly charts, if anybody ever pulls it up, that you can find right now. And I think watching how Bitcoin trades and comparing it to how gold trades will be very indicative of how people feel about Bitcoin, right? If the correlation to risk assets and equities comes back, it's more of that, you know, debasement against fiat, or that hedge against fiat debasement. Whereas if it starts trading more like gold, you can say it's kind of that narrative of outside money, that flight of capital to outside money. Okay. That's kind of how I'm viewing the big picture.
Yeah, thank you for that, Jason. Todd Groth, tell me about what you tell investors at this point as we talk about, you know, we've all been talking about the banking crisis that we saw. We have a Fed that's been raising rates. Todd, what's your advice to investors quickly?
I think also it's a matter of, while the Fed is raising rates, Bitcoin is a global asset, and we still have central banks that are providing liquidity to a global financial system. Notably, the Bank of Japan is still buying government bonds as it maintains yield curve control, while the People's Bank of China is stimulating an economy that is much weaker as it exits lockdowns post-COVID. So I think it's,
I don't know what's up with the scanner and always putting Zim
it
so
can also
high.
change correlations with either risk assets
just
or
always
against US dollar. We now see it more correlated to gold. It's a bit of a chameleon. It can kind of shift and change its colors. But overall, we find that it has provided that recent
AMC
hedge
is like
as
always
expected
up on
we
this
have
scanner.
through a banking crisis.
Kind of want to start trading it.
I'm going to leave it right there. I'm sorry
Nice
we're a little
bull flag.
squeezed today,
Yeah,
but we'll
I'm doing
continue
that.
this conversation
sure.
because Bitcoin's not going away anytime soon. We'll have a lot to talk about. Todd and Jason.
AMC was always a real
Thank
play
you
noise,
very
guys. Let's be
much.
real.
Todd Groth
Let's
of
just
CoinDesk
really
Indices and
dig down
Jason
deep and think about it.
Pagulatos, head of markets at Delphi Digital. Thank you both.
Right?
All right, that's going to do it for us. It's Monday.
Really, right?
Trading 360. Look, we're off the highs of the day right now.
421,
Dow is
450 is
holding
what
on.
I'm
It's up
doing.
about 218 points. Keep it here on the TD Ameritrade Network. I'm Nicole Petalides. I will see you at 2 p.m. Eastern Time for the watch list and Fast Market next.
We get Gen A. The only thing that's sketched me out is their lawsuit ever going on. I did it. I put an order. A long time. Do it, do it, do it. HKD had a little flush there. Got a stop limit for under 670. And just like that, AMC's popping. I got filled. Whee. Guard Force looks like it's breaking out. Bouncing up a VWAP. Yeah, HKT's gnarly. I was hoping that it would have done a move by now after that pompous day, but I don't know, maybe it's a cup and handle. Can't really do TA on this, I don't feel like. Basically, when the volume turns on and it's high on your watch list, you just gotta go get in and get out. No, today's very green. Basically, the whole market's green. Small caps are not doing as well. That's it.
Tom, is the official number that they reduced on a daily basis. And people might think OPEC Plus, well, that's Russia. No. 500,000 barrels of this is Saudi Arabia. Yeah. So it's not, it probably is Russia in a way, but still it's Saudi Arabia flexing their muscles. Tom, they like $80 crude, not $65 crude.
Yeah, they like $80. And I think their cost base in Saudi Arabia alone is like under $30 a barrel. They just stick a well in the ground and it's popping up. So, yeah, inflationary pressures might start coming back now that we get crude oil.
That's the risk there, right? Mm-hmm. That higher crude oil prices are going to go right into CPI. Right. If they're 65 versus 80, guess what? That's going to raise the overall inflation level.
Yeah. In other news today, Tesla came out with their delivery numbers, along with a bunch of the Chinese EV makers also. Let's bring in Caroline Wood, Senior Markets Correspondent here on the network, to help us break down the story, because the street doesn't like it right now because the stock's getting hammered here, Caroline.
It certainly is, Tom. It's down about, Tesla's down about 6% right now. It's the biggest drag on the S&P 500. And it's interesting because it's hard to actually say if these results came in line with expectations, if they meet or if they beat, because expectations were all over the place. I saw, in terms of the delivery number, as low as 410,000 and as high as 451,000. So these numbers, let's run through them. Q1 deliveries, 422,875. That could be in line depending on where you were. It could have been a meet, or it could have been a beat or a miss. It was an all-time record, though. It was up 4% from the fourth quarter of 2022, up 36% from Q1 of last year, so the same period a year ago. The majority of those in the delivery figure were Model 3 or Model Ys. Those were, of course, the vehicles that had those price cuts at the start of the year.
What led you to these conclusions?
Demand. The more expensive Model S and X's were about 2% of those delivered, so around 10,700 of that 422,000 number. Total production, meanwhile, was at 440,808 vehicles for the quarter. The expectation there was around 432, so a beat there. Also another all-time record there as well. Dan Ives of Wedbush weighed in after the results, saying that price cuts have paid major dividends for Musk & Co. as demand appears very solid despite an uncertain macro. His estimate was around 420,000, so this was a beat in his mind, and he thinks China was really the key to the beat, although they don't necessarily break down by region. The delivery number, he says, was a clear step in the right direction, though, and is a positive for the bulls digesting these deliveries. So he kept his outperform rating and $225 price target. Goldman Sachs is also in the buy camp. They actually raised their price target to $225, so now they're in line with Wedbush. And even more optimistic is Deutsche Bank. They maintained their buy and $250 price target, saying for the rest of 2023, maintaining its 1.78 million unit forecast and 20.6% automotive margins. It's going to be the key number when Tesla reports. According to Deutsche Bank, they have confidence that Tesla will deliver on cost and operating efficiency, helping deepen its competitive moat. Cowen, meanwhile, maintained a perform rating, raised its price target to $170. So obviously that's below where Tesla's currently trading by about $24. It's trading around $194 right now. Shares down more than 6% at this point. Keep in mind, though, Tesla is up almost 60% so far in 2023. Some might say that was priced for perfection, and even if these results were in line with expectations, it's not necessarily perfect.
Caroline, couldn't this be just as easy as saying 36% year over year is a great number, but Elon Musk is promising 50%? And that may be where some of the disappointment comes in. You know, when I read, the expectations were just slightly below where these numbers came in, but their ability to drop price and still maintain margins that are pretty substantial puts pressures on all the big automakers. And, you know, Elon Musk continues to, you know, plan to bring out lower price models and drop the prices. And I think this competition between Tesla and these other vehicle makers is just getting started. But Caroline, 36% isn't 50%.
That's true, although a slight miss doesn't necessarily, some may say, warrant a 6% drop in the stock price either. So it's hard to say. And when it comes to margins, we don't really know that figure until April 19th. Keep in mind, Dan Ives, I think it was last week actually, or maybe a week before that, said he wouldn't be surprised if Tesla actually continues to drop prices both here in the U.S. and China to try to spur up demand. So that could come at a cost, and the cost would most likely be margin pressure. So I think that's going to be a really key figure. You know, Deutsche Bank said that they expect those to come in at 20.6%. Dan Ives said 20% is the number to beat, but keep in mind they were at 29% at the same time last year. So that would be a pretty big drop off. So I do think it's clear that Tesla is the clear outperformer. I was talking about the Chinese EV automakers today in terms of those figures. They came in mixed, but you know, GM also reported 20,000 EV deliveries for the quarter. So Tesla at 423,000 is obviously outpacing so many of these other automakers, but not without competition. Of course, that competition is heating up, especially as you look at the back half of the year with so many EVs in the pipeline. So yeah, still some question marks there, Kev, and especially about those margins. So we're going to have to see. You know, Deutsche Bank thinks they can keep in line with that 1.8 million that Elon Musk had kind of promised. He said maybe as possibly as 2 million vehicles for the year if there aren't any production issues. Of course, demand issues would be a thing too. So off to a good start. I mean, you really can't complain about these numbers, although I guess you could say investors are doing that by selling shares. But we kind of have to see how the rest of the year plays out.
Yeah, those shrinking margins might be an all-out valuation.
I think
that
GME,
a lot of people
they've sold through a lot of their
Tesla
inventory, which
at this point, just
bolster
because
their numbers.
It's highly valued due to the fact that they've got the best margins by far in the industry. All right, thanks to Caroline Woods, senior markets correspondent here, breaking down the Tesla story.
What they do compared to expectations.
But now let's bring in Nick Theodorakis, financial risk management director.
If the analysts are reading into that too in the
Ameritrade.
earnings,
Nick, I wanted to kind of get your take here
shouldn't be too
on
high
this
for next one.
surprise OPEC plus
But they
cut
probably
on
still will
production.
be.
It seems
And so
like
that
you
would
know
be bad.
those inflationary pressures that were going away when
number.
crude just a couple weeks ago hit $64 a barrel. Those are kind of gone now. You know, you got crude oil up 6%, and that has a major impact on inflation and our economy.
Well, the Fed certainly is taking that, with their comments, today, and I think we're going to hear more of that, right? Like, inflation's still real, guys. I mean, that's what they're, pounding the table on, and it's going to have, this cut, I think, has, ripple effects outside of the outside of just the energy industry, just because of this inflection point that we're at with inflation. So absolutely, it pushes that back up. And I think even when we were at $70 a barrel, right, you're thinking, okay, this is relatively low, and now we're back at that 80 number again. And it felt like we weren't going to get there anytime soon when we were trading, 68, 70, and now it's like bam, right back there. So it's a bit of a mental number. It's also not good overall for inflation. I think what's really interesting is also what's happening with Russian oil, right? There's, clearly it's the cheapest out there, and you're seeing, other buyers in that. You're hearing, about China piling in more.
EVTL had a nice bounce there.
A geopolitical concern as well. So I don't think that, this OPEC move really does much to.
Also a nice bounce, down 4% still.
Long-term path, and I think the geopolitical kind of instability is ramped back up a little bit. So. Not horribly surprised, guys, to see markets giving back those gains from this morning. And you start looking at some of the manufacturing numbers that we got, and we're going to get some more later in the week. Now input costs are going back up again there, so it's not a very consistent downtrending inflationary story right now, and I think that's again not surprised after a really strong first quarter to see a little bit of a sell-off here to start off the new week.
Yeah, Nick mentioned the manufacturing numbers. Fifth straight decline for the or below 50.
And below 50.
Yeah,
right.
For the ISM. This kind of reflective, Kevin, that on that manufacturing side, inflation's not as sticky on that part because demand's coming down a little bit. But at the same time, the market took it right when these numbers came out as a positive.
Yes,
and
I noticed that too.
I've got a real quandary. I got a real problem when markets react up on bad news, because there's still some underlying, negatives in, having numbers like this, right?
Well, remember, your knee-jerk reaction is correct. The market shouldn't go up to bad manufacturing data, and both were below 50. 49.2 on the PMI. 46.3 on the ISM. So both numbers below 50, which means contraction levels. And so to make it real easy for our listeners, below 50 is that middle, right? Yeah. One's contraction, one's expansion. So both below 50, but Tom, the end game here is interest rates. And the weaker the economy, Jerome Powell either stops or lowers, and that's what now is the market right to think that? I don't think so, but that's what they do think, and so you saw the market rally on the week data, 100%.
Yeah, and I think it goes both ways, Kevin. When the market
goes
down,
I don't know if they really could be
mediocre
two accounts in Discord,
data, right? Because we've had that.
I'm fine with it. I don't care
about, especially on the jobs front.
I think like with verification stuff, I guess I could have two cell phones.
Expectations of a quarter base point hike by the Fed at the beginning of May, still below 60% levels. Interest rates. Kind of sold off after these PMI and ISM manufacturing numbers, and it still seems like the market thinks that we're going to get 2 to 3 cuts before the end of the year.
35's coming, 13.5% down.
Well, if you take a look, guys, at what the markets are projecting, right? We always say markets are right. Well, they're only right with the information we have at the current time. And I think what the market is projecting, and again, why I think we saw a little bit of a give back on those numbers from this morning in terms of the overall indices, is because if you're actually in contractionary mode, right? You're manufacturing less. It doesn't seem like the reopening in China is really going to help our inflationary story. So it's like, where is that going to go longer term? You package all this stuff up, and if you get into different indicators here in the U.S. showing contraction, and the Fed being really stubborn with their stance of higher interest rates, well, something's going to have to break, right? And who knows what that's going to be? We thought the banking thing a few weeks ago might be the real slowing, for the Fed, and they went to a quarter, but they kept the language very open-ended. So I think we're expecting another quarter that didn't seem to have the spillover effects. But what's going to be the thing that actually breaks, where we see, now it feels like we're in a recession? Some indicators show we're already there, right? Others, you look at the unemployment side of things, and it's like, wow, this is, job market's still really, really strong.
Yeah, I don't see a problem, I guess.
It's unclear. But what markets are really saying is there's enough indicators, forward-looking indicators showing contraction.
Cracking down the grays.
Even though inflation's higher than they want it to be, there's going to be real.
Yeah, no one claimed that one. I don't know if Brad can still claim that membership, but it's there.
So I think we're the base case for me is that we get to we get to a 5
Lisa
or
and
5
Sarah
and a
are the same
quarter,
person.
and we pause, and we're there for a while.
I
And
mean,
I think the
whatever.
Fed's going to be watching that and watching it, but I just don't see them going from one meeting to the next of raising a quarter and then lowering, a quarter,
right.
Unless something really changes with the economic data. So I think markets are, looking at it as we're going lower in rates, and that's probably true over the long term because of the slowdown. The question is, how quick is the slowdown? How quick does that trigger it? Markets are saying
there's a gifted membership for you there, Brad.
The Fed's saying we're going to need to stay high through the end of the year.
Did you ever figure out if the transaction goes through if no one claims it?
There. And I think equity markets can live with stable, right? We don't have to see declining
rates. That's your free membership
there,
man.
See stable rates and stop the increase. And then, I think equities can form a base around that.
Yeah, and I think that's already happened in the equity markets at this point, Kev. But, I need to sit down in an airplane and have an empty seat next to me instead of a full one because that stickiness in the services side of inflationary pressures, people aren't stopping traveling and they're not stopping going out at
Fix
this
yourself.
point. I think that's the
you might have to
part
link your
that
account
needs to
with a Google account.
Next to get those inflation numbers down
still
to
kind of rebounding from that drop this morning.
Or they want, I shouldn't say expect, that they want. But we got jobs data this week, Kev.
Yeah.
That's probably going to kind of reiterate the fact that we're still pretty robust, healthy jobs market at this point.
Starting tomorrow, we get jobs data, some type of jobs data every day. JOLTS.
I've been trading Coursera.
They're expecting 10.4 million opening jobs, down from 10.8 every month. Tom, they put those consensus for lower.
It used to be fun to trade when it would
they never
actually
get
move.
to that consensus. So I would expect
really
this
green
number
a lot.
to beat that.
What if it goes below 10 million?
Well, if you get a shock number from 10.8 a month ago to below 10, yeah. That'll be a market-giving event.
It might be positive. It might be
negative.
negative.
That would come down as positive because it means job openings. The strength in the overall.
Oh, you definitely need to subscribe. That's for
labor
sure.
market is decreasing.
Yeah. And then
Let's not even talk about
jobless
that.
claims, and then Friday.
ADP on Wednesday, jobless claims, and then payrolls.
Payrolls on Friday. We're closed on Friday for the Good Friday holiday. So, that's going to be an odd. The jobs number comes out. So watch next Monday.
Give us a reason to watch on a holiday.
Right. All right, guys, let's take a quick break. When we come back, we're going to extend that discussion on energy, and we're going to look at Occidental Petroleum, which is popping today on the back of that OPEC Plus production cut. Fast Market's coming right back.
Let's walk through chart.
go out and look at the option statistics that you can see on the trade page, they're in the 3% range for their historical implied volatility. The vol is incredibly low right now. And what I was doing was just looking at a chart and kind of where they've bounced off of, and what the range looks like. And with this news today, it's a pretty good pop. And you can buy this spread, 18 days out for 45 cents. Right? So you're paying about 15% of the spread width. And all you're really looking for is a bit of a pullback, from this level that they've got. So it doesn't seem like a very high cost. And to kind of confirm that, I scratched my head like, wow, the vol is so low compared to where they usually are. That's why I went with a long option strategy here, just thinking that if that vol picks up at all, this could hold its value, but you do need to move lower. So you pay 45 cents on a $3 spread. Your risk is the 45 cents that you're paying. That puts your max profit at about $255 per spread. So a pretty decent risk to return ratio because that vol is so low, but you do need to move lower.
Yep. Let's break this down. Going out to the April monthly cycle, so about 18 days till expiration.
36.50 on BBY.
62 puts.
Down 14.5.
Selling the 59
14.6.
Paying roughly about a 40 to 45 cent debit for that spread. There's your risk, right? It's $3 wide, so you've got about $2.60 in potential reward for those below 59 at expiration over the next 18 days. On this
EVTL over $2.
But you're buying an out-of-the-money put vertical.
Push down 5.5
risk
just a
reward
VWAP.
looks really good, right? Because you're risking only 45 cents for this
5.5
with that potential reward.
To make 260.
Yeah, and this stock was trading $55 just about a week and a half, 2 weeks ago. So your thought here on buying the bearish put vertical as an example?
This is a great discussion on trade-offs, right? Because a lot of times on this show we talk about out-of-the-money verticals, right, and selling them. But if you look on the Thinkorswim platform, the 21st, if you buy the 62 put, which is what's Nick doing, there's a 75% chance.
Yeah, I thought that the first day. I was like, oh, this looks like dilution.
Right. So that's
they announced a share offering, then it just did all this.
Return if you're right. So remember, this stock is up almost $3 today.
Yeah, you're 54%.
And remember, if it goes back to
it seems like a lot though.
$3 where it was trading prior to today, you're going to be really close.
I thought the share price wasn't even high enough to.
This is just a simple seeing the news in crude oil, seeing the
raise that amount of capital
energy stocks in general,
with the amount of shares they have. So I don't think they can dilute yet. I think they have to wait till it rallies.
That's 6 to 1.
Yeah, exactly. Those trade-offs with it being out of the money, and that's why it's so inexpensive. And Nick mentioned implied volatility is at or near 52-week lows in there. So when you're buying verticals such as this, it's going to cost you less because there's less option premium in that option that you're buying that's closer to at the money.
Yeah, about 50 cents.
All right, great look at that example trade there in Occidental on the oil news today. Thanks to Nick Theodorakis, Financial Risk Management Director at TD Ameritrade.
I mean, that day, though, it hit.
We're coming up after the break. Kevin and I are going to be joined by Landon Swan from Mike Folio for a discussion on Ulta, which is up about 16% this year and hitting all-time highs.
Yeah, here they're
stick around.
That was one of the bullish things. It's like, oh, they're pricing a big move to the upside, or they wouldn't even have initiated that share offering at these prices. Yeah, again, there's just a lot of unknowns. It's not straightforward. I mean, I feel like it got more straightforward once they terminated all the other equity deals with the preferred shares and stuff and just did a straight share offering. But what's all come of that though? Now they've terminated it. It seems like HBC just made out with a bunch of money and just dumped BY stock price, and now we're back to just way lower share price mixed with a new share offering. Now the free float's 425 million. Yeah, I don't know. I don't know what options they have. McDonald's Corp to lay off hundreds of corporate employees this week. Atlanta Fed GDP now Q1 1.7%, previous was 2.5. Germany's ruling coalition plans to require the private and public sectors to cut energy consumption by 26.5% by 2030 compared to 2008. A draft law seen by Reuters shown on Monday. Yeah, I saw Box D declared bankruptcy. I wanted to trade it back here when it was rallying on the news. I'm like, it's sketchy. It has a volatile days though, up and down. HBC, maybe, yeah. I mean, from what all we can tell, it seems like they took the safe route and made whatever 8% on their money or whatever it was, and I guess BY had enough of it and terminated and just went with the normal share offering.
A different demographic there, but they do have some trends working in their favor. Makeup demand is up about 23% on a year-over-year basis, but if you zoom in and look like over just the last little bit, it's down to about plus 13% on a year-over-year basis. So makeup is actually starting to slow a little bit, but it has had a nice run. Makeup and skincare, both of them. I mean, I think we've seen that movement from makeup into skincare overall as sort of, correcting the problem as opposed to covering up the problem, I think is the sort of the analogy a lot of people talk about. But Ulta is doing well, hitting both of those. I do think that, one of the things, I talked about the consumer being a little sensitive to economic conditions. There is this so-called lipstick effect, which I'm not aware of, but I was
This is going to be really devastating for the individual investors.
When you don't
it's
have
like
a lot
as
of
big of a
money to
movement as
splurge on
GME,
maybe
but
that new dress or the something very expensive, so you get a new stick of
BY
lipstick to be yourself,
goes bankrupt, and there's not like an exit for people
to treat yourself, I guess. So that I think is
I
helping.
don't know. The amount of dip buying I'm seeing
just because prices are
BBY
going up doesn't mean you're going to get killed as a makeup and
like
skincare seller.
It's
but
awesome,
but
it's
affecting Ulta more than Sephora, and
it's scary.
One of my concerns is just the balance between the strength of their consumer data versus the stock price.
People are buying this up like crazy.
If the stock was chugging along at $400, I'd be slamming the buy button. But now it's giving me a little bit pause, just making me wonder: is it going a little too far, too fast, and will they be able to support these numbers on the next
20,000 shares at 40 cents.
Discussions about lipstick out of the way, Landon, for now. Let's talk about the stock, which, I think that you're right. The news is good. I don't know if it's this good for what this stock has done, because it's gone like solid. These numbers are pretty meteoric in terms of its rally. But Landon, how much should we connect? We love to connect things in this business, right? How much should we connect Ulta to Target, right? Or is this, they crossed over a big number this year in 2022, which is $10 billion in annual sales. So that's a big number. They look like they're on a really good path. Tom and I talk about a lot. Not a big float on this name, so but it is getting approaching overbought. I mean, the chart looks meteoric. Is this a time for a pause? Is the data that you're seeing as good as
just
this
added
chart
a little
looks?
bit more.
The data is not as good as the chart looks. Again, if it was 400, 450, I'd be saying let's go, and if it hit 550, I might be thinking about selling. So I don't think that the data supports 550, but I'd much rather have a strong stock and strong data than the opposite. So it's not like the data looks bad. I mean, some of the underlying trends, consumer trends are slowing down. Makeup demand I talked about, and some of the purchase intent and mentioned data for Ulta, while strong, is again slowing down. So
Ubo had a big
the fact
wick
that you've
down
got
there.
That change,
you
know, the negative acceleration, if you will, gives me a little pause at this level. So I would be more likely to be taking profit here if I was an investor in this company. It's been a great run. And I think right now is
my
we've got some data that is not going to support just a continued run. Maybe we can hold here. I'm not sure, but I don't think that it's just going to, you know, the next time the data comes out, I don't think it's going to run another 15 or 20% over the next few months. So that being said, I do like your point about Target. I think that, you know, they've got a challenge in connecting the higher price point that they've got with the broader consumer. And I think that Target could bridge that gap for them. I really like that play.
It's genius.
It's just a matter of quality versus quantity. I mean,
after the war starts, who would have thought?
I mean, the price point really.
It's a sell the news type thing.
To hit all consumers with a high price point.
That's why they're,
you know, they have a larger audience than you know, Sephora.
Thanks,
has a much higher
appreciate
price.
it, man.
So I like the strategy that they're going with.
Freaking guy.
And I think long term it could work. It's just right now, maybe there's a little bit of pause deserved in the stock price.
Yeah, and you know, that's one of the first things they teach
totally
you
that
you know, makeup and beauty stocks like this are resilient to a recession, right? Because it has become a staple in a lot of ways.
This kind of looks like the Ace Ventura Ghost from Christmas Past. Just cruising through, no one notices you. You're that kind of glowing.
Like maybe some of your data, even though the numbers
come to just drop some news bombs on you.
Up a little bit. Is this one that, you know, when you see maybe recessionary fears come in, does your data change for these? Or is it one of those companies that historically, based on your data, remains resilient during maybe a potential
the alert comes in late,
which a lot of people are expecting by the end of the year?
Yeah, thanks, man.
Yeah, I think really for us, it's not the economy in general.
Did you trade that?
For us, it's more about the consumer trends that focus
definitely having daily videos
on this company. So skincare and makeup demand in general are very important.
I can't remember.
They have seen a big move. I mean, you know, we've got some interesting comps with COVID times. I mean, it's not year over year at this point. Now it's year over 2 years or year over 3 years. But
I didn't
still,
trade the futures. I think I've actually traded this.
A lot of people did not buy the same level of makeup and skincare because they weren't going out or they had a mask covering half their face, so they didn't need it. But you know, it's interesting to see how that's returning sort of back to normal and actually accelerating. I think as people got back into the makeup and skincare game, skincare more so, they started, you know, evaluating new products that they like, and they started discovering new things and expanding their purchase selection. So I do think that it's really important to look at the consumer trend overall, and we're still up, like I said, makeup demand plus 23% year over year. It's slowing down. If you look at the 30-day,
moving up here a bit.
That's more of a 13% year over year. So it's definitely slowing down, but it's still up year over year. So they've got consumer trends backing them, which is definitely a positive sign.
Reversal
I would say that, you know, in contrast to what's happening at the general economy shows us that, I agree with you guys, it is a resilient industry to be in. I just wonder, you know, to my earlier point, does the consumer that they're going after, you know, the target consumer, are they a little bit more pinched than maybe some of their competition with Sephora, who's already got high prices?
I think this one could go crazy.
People that are buying that don't really care. So I'm interested to see how that plays out. They've got the consumer
so many reverse split stocks
that have gone nuts. They've got the demand behind them. It's slowing. Everything's there, but it's maybe not accelerating like the stock price is.
Yeah, and over 40 million loyalty members, so the omni-channel portion of their business is doing really well at this point, as we saw from those numbers last quarter. All right, great stuff. Great data as always, Landon. Appreciate it.
Following it, though.
All right, thank you, guys.
All right, that's Landon Swan, co-founder of Likefolio, breaking down the data for us here on Ulta. Kev, now you got an example trade here basically set up.
They don't need reverse split desperately.
Landon's talking about where maybe the stock price is getting a little bit ahead of some of their
data.
They
could go without a reverse split for
no
a long
matter
time.
What the stock is, good or
you know,
bad,
maybe
at some
even like
point
a
I
year.
want to be shorted, and some
That's
point
why
I
it was
want to
kind
be
of
long,
weird that they
right?
announced
No
it when they were
matter
still
what
even
it is.
above
At some
$1.
point, you just don't want to touch it.
Right, exactly. So in this case, you look at a couple things.
As far
it's
as
approaching,
they don't need it as far as
on the RSI, it's up to
compliance goes that soon. Like it's not that big of a rush at all.
The implied volatility.
If they need it for other reasons,
you know, I'm getting all these
I don't
numbers
know.
using the Thinkorswim platform, Tom. Today's option
as far as
stats, you look at the
like
IV percentile. It's 4%, which means it's at the low end.
Seems like they're
of the
probably gonna do
range
it though.
there in terms of implied volatility. So that
This morning they said they're
and
going
now, Tom, it is
to
now
maybe do it 20 to
officially,
1 now.
Almost 50, or I'm sorry, almost it's $28
If
away
it doesn't,
from
they said they're going to go
50-day
bankrupt.
moving average. So here's what I did. I took all that data, and I got a strategy.
They said that in the
where
filing with the
I
reverse
bought-
split
I went
proposal.
out a month, Tom, a
If
full
this
month. I did
reverse
the
split doesn't go
April
through, if this
28th,
share offering
so I
doesn't go through,
basically
we're
did
going
the
to
entire month, and then
probably have to file
April 6th,
bankruptcy.
this Friday, or this Thursday actually, and I did the 420. I paid 420 for the 520 put calendar. Now, that takes advantage of the low implied volatility. I'm a net buyer of Vega. Going a month out, Tom, look at the Vega on one spread, $36.
wick.
So if you get any uptick in implied volatility, you're more profitable. I lined it up with a move back towards the 50-day moving average, which is 520. And Tom, I gave myself enough time where I can, if you start getting that move down, you can chip away at the net debit using the rolls. So a full 3-week spread that you pay about $4 for, but you know, this stock can move, Tom. As you know, only 50 million in float. So
small,
it's a mover.
Smaller than other names as far as share float goes. 150 million shares outstanding, publicly traded. Let's break this down. Buying the April 28th weekly 520 strike put, selling the April 6th weeklies that expire this Thursday. Remember, closed on Friday. 520 put, paying roughly about $3.95. Let's call it $4 debit. Price discovery might be warranted on something like this. But I think the thing that stuck out to me, Kevin, is implied volatility at or near the 52-week lows due to the fact that the stock has risen so much. But then also, if the stock does pull
this
back,
might finally be a good time to shorten video.
Historically, you'll get some pops in implied volatility.
And you've got a lot of Vega, a fair amount of Vega, not a lot, but
this is a
good chunk.
long vol or long Vega strategy.
You got an RSI divergence here.
Volatility expands.
Today's now setting up kind of inverted hammer.
About 546 on the upside, just below the current
so
share price,
strong.
and then all the way down, just under 499 on the downside. Thereabouts. Near those levels where you can still remain profitable. So expectations on this type of example are expecting maybe over the next 25 days that the stock kind of grinds a little bit lower, consolidates, you know, at or near that 520. That's where you're going to get the apex of profitability. You have
that divergence is enough for me though.
One last thing, you know, we always get
and
the
then that inverted hammer candle is pretty bearish.
Negative theta on this trade because that front month option, the expected move, is less than that move down to that strike.
It's in an uptrend.
$10. There's not enough premium in that front expiration. There is some. It's about $0.50, but it's not enough to make you positive theta. If you want positive theta, go out to the April 14th. Go maybe
and
one more week out and sell that one instead. That'll give you the positive theta. But since you're $28 out of the money, it's a cheaper spread, but you don't have positive theta yet. It will get positive if you start to move down.
Right, and that's a flexibility of calendars. Put the strike wherever you think a stock is going to go over your duration outlook for that stock. So good look at
down here
calendar to the downside. What you pay for it is your risk. In this example, $4 is equivalent to $400 per spread. You do have some assignment risk on that short option. The ability to roll if the market's open, liquidity is provided, where you can roll that short option on a week-to-week basis, collecting credits. All right, Kev, got to take a quick break here, but when we come back, we're going to take a look at NVIDIA, which has rallied about 90% so far in 2023 as chip stocks continue to surge. Fast Market's coming right back.
See, this is the thing where price action is, you got to be careful because we had an RSI divergence on it here. It didn't do anything, but price action just looked bullish. Had it here and then just had that little sell off. This is a bigger RSI divergence, though. Volume's getting weaker too, from this rally at least. Talk myself into this trade. Yeah, I put an order in. They're expensive options. Kind of out of the money on that one. But I got a pretty good amount of time. Tesla could be getting to a top also.
to become one company. Now, upon close, Endeavor will hold a 51% controlled interest in the company, and existing WWE shareholders will hold about 49% interest in the new company. But the two combined entities, those being UFC as well as WWE, they said will have a pretty significant global reach as well as impressive scale and omni-channel.
Yeah, it's kind of an interesting deal going on here with WWE.
On a combined 2022 fiscal year end basis, UFC and WWE achieved revenue of about $2.4 billion and a 10% annual revenue growth rate since about 2019. So both of these companies have been pretty consistently solid, and we've seen outsized demand. Whether I agree with it or not, WWE has actually been a name that has fared quite well in the overall media space, with shares up about 40% over the last 12 months and up about 27% year to date. So it's actually been kind of an amazing one to watch. Again, I can't say I'm a huge WWE spectator, but I do respect the fact that this has been a really resilient company, led of course by Vince McMahon. Now, the board of directors will consist of about 11 members. They will be appointed at a later date. 6 of those will come from Endeavor Group, 5 will come from WWE.
We'll triple bottom down here.
Just a really interesting partnership, given I would always assume these two would be rivals. But watching now Ari Emanuel and Vince McMahon speak and interview and get really excited about this, I do think there's an interesting market to be had and definitely a ton of demand there. So it will be interesting to see the way this shapes up for WWE shareholders naturally.
Yeah, I just look at these two companies and you just look at sports entertainment, because that's what they both are. And WWE, by the way, just had their a SmackDown, whatever, their championship, WrestleMania this past weekend, and that set records for attendance and revenue generation.
Did you watch?
I did not watch.
I'm shocked.
I am not shocked by that at all. But two companies mixing it up here. Great rundown here by Jenny Horn, markets contributor here on the network, breaking down that story. Both stocks down about 5% after that news. But now let's talk NVIDIA, and let's go to Kevin Green, senior markets correspondent. He's got a little background for us on NVIDIA. Kevin, stock's up 90%. I mean, it's just been parabolic this year. All you have to do is mention AI, and the valuations just explode here for this stock.
Definitely, Tom. And actually, it was before AI.
Well, they're trying buying first on Friday.
Maybe here, a lot of investors have been utilizing a lot of these large tech companies that have a significant amount of free cash flow and cash on the books to be able to try to shelter from some of this volatility. And the AI type of trend actually started adding on to that. But
the
now
day after hours
is going to be valuation.
Well, no, we haven't, because the day after hours hasn't happened.
Resistance point right at about $287, starting to form a little bit of a double top type of pattern here. Bulls want to be able to see it break through that $287 level. That would give them a lot of confidence that they would be able to continue to move to the upside. But if we talk about valuations, the price to sales ratio right now is trading at about 25 times. Price to free cash flow ratio at 175 times. And our forward PE right now is trading at 58.41. Tom, this is actually trading at one of the highest PE or forward multiples that the stock has actually seen in its existence here. So how much can it would it be able to sustain itself?
I don't think he's able to.
To hear some chatter coming from a lot of countries.
He's not able to buy before earnings.
Regarding potentially
they have blackout periods when they can buy and sell.
GPT and some of these other language models,
since they're privy to inside information.
The uncertainty that they have as far as
little
its ability
BBBY.
to not only just be able to increase productivity, which is going to be great, but if it's going to be harmful in other ways, if it can be corrupted in one way or another, that is also a significant risk for this company. If we do start seeing some of those blockades going up, that could cause the growth or the perceived growth of this marketplace to slow down here a little bit, and that could take a little bit of steam out of the stock moving to the upside.
This thing's going to break out, I think.
Segments in NVIDIA are starting to see a little bit of bright spots.
Beautiful consolidation over VWAP.
We saw a significant run up during COVID-19, then a significant drop off. There are a lot of analysts that believe that the gaming segment has now bottomed out, and we could see some multiple expansion when it comes to that side of the business here. But overall, the AI story has been the one that has captured not only traders but investors' attention here. But the key is going to be that price action. Can you move above $287? Break this, double top type of pattern?
Chain bottom Friday.
Or are we going to see it tracing back down after some of this, type of flare around AI starts to?
I mean, last time I saw either of them buy was
definitely, and
a year
it doesn't
ago.
hurt that
this
Bitcoin
last earnings,
rallied
right?
about 70% since the start of the year, also because that's where they made a lot of the gains.
They're doing after
when
earnings.
Bitcoin was rocking. Also, all right, Kevin.
They didn't.
Great stuff as always. It's Kevin Green, senior markets correspondent here, joining us.
True, they usually have a window.
NVIDIA on this massive rally.
Last March though, when RC bought.
I mean, you just can't stop it. Valuation's getting outsized at
that
this
time,
point.
So I don't know.
But the total addressable
during
market
March earnings or what?
We don't know what that is. But
there was earnings, and this is when he was buying right here a couple days after.
October 13th, it traded
like the day or two after.
108 and changed. October 13th.
I don't know
if
that applies here or not.
With a high of 279. So meteoric. This is the second stock
that
we've used. This is the second time today we've used the term meteoric to look at a chart.
There's a limit.
AI is important, and they call large language models is what they use. And here's the thing, Tom. They're on the cutting edge of just about everything. However, is it this good? Is it as good as this stock is? I don't know. I have no idea.
That's how investors have to look at this, right? And the fact that, tech wasn't getting hit as much as other sectors over the last month and a half, the banking crisis, this was kind of like a safe haven also. But then anybody that mentioned AI in their conference calls, their transition into that total addressable market, which we don't know yet, but valuations versus historical levels really elevated. Remember, this stock 3 years ago today, Kev, $59 a share.
Yeah.
So it's,
like I said, they're a leader in AI. They're a leader in machine learning. If all this catches on,
631 top. Are you on YouTube chat?
Then this stock is probably fairly valued.
You're 631 top on Discord.
What Kevin Green said, the valuations are getting absurd now.
Yep, it is. And we wanted to look at a strategy that maybe takes advantage of maybe some consolidation at least. The RSI near the 70 level, so overbought on a technical level. We all know that it can go far above 70 at any point and not be overbought at this point. So looked at a strategy that takes advantage of maybe a consolidation or a pullback, just selling an out-of-the-money call vertical to the upside out in the April 28th weekly cycle. So about 25 days till expiration, just under a month. And looking at selling the 290 strike put, Kevin mentioned some of those technical levels of resistance up there, and then buying the 300 strike put. So don't be a hero on this type of strategy because it's still risk defined. You're collecting roughly about a 260 credit on it. That's what you can make.
First.
The short call vertical, $10
Got tight
wide.
spreads,
Kevin,
but I'm
your
chasing
thoughts here on this one, because you still have about about $740 in risk on this trade.
Yeah, it's a, you know, this is what we talk about a lot. It's a big boy call vertical, right? We do a lot of smaller ones. We do a lot of $5 ones. This is a $10 one. 260. You're bringing in.
Oh, I sold the rest of my BBY calls. Is it ripping?
It's the infamous trade-offs that we talk about all the time. But you're right. The stock is getting close to overbought, and you've got room on the upside for this stock still to go up and this to still be profitable. But Tom, the risk is that this market continues and NVIDIA's strength continues.
Right.
If not, data's on your side, about almost $4.50 a day. Time is on your side, and you're short. And like I said, it's a high probability passive short delta, but
I can't move the stock.
You're wandering into
March,
the
you bought it in March over like 1 or 2 days.
A lot of people trying this type of
like
strategy over the last 3 months have been probably burned.
That was the first time.
Because the stock has
first time, but one of the rare times we saw GME move naturally.
160, 200, 240. I mean,
before then, we haven't seen that.
You do have that cushion about $15 to the upside.
Yeah, it was this. It was like these 2 days. I think he bought. Yeah, maybe just these 2 days actually. He bought on the lit, so it.
A little rally, but staying below 290.
All
right, Kev, that's going to do it for you and I today
just
here on Fast Market. Stick around. Next Gen Investing is coming up right here on the TD Ameritrade Network.
And then he had the find that he bought, and that of course is bullish news. So I don't remember how many bought that time. GFAI breaking out there. He has to buy on lit? I've not heard that before. As the chairman, you have to buy on lit? I've never heard of that. Swimming dirty pools. See if this thing makes a new high. Got 18 up here. Third's kind of double bottoming there. EVTL. GFAI wants it. All directors and officers have to buy on the lit? Really? I didn't know that. Huh. That's funny. Because I remember when he bought in a year ago, there was so much hype because he was buying on the lit. It was like... It was rubbing it in their faces, I guess. I don't know. It was... Like, oh, he wants the price to go up. Didn't realize that's where he had to buy. Yeah, I've never heard that. Video crashed bearish on the hourly. Good first start to the descend. Nice inverted hammer would be a good close for the daily. Need it to break break through some of these supports. First one would be like that doji. Even there. Eyes moving down. GFAI. Oh, gonna do it. Buy coming back down to the lows of the day, maybe. Open. Another $5,000 purchase. Click on BBBY today on Reddit. Oh, that's crazy. FAI doesn't want it.
Seeing some overall strength in the energy space, an area we don't frequently talk about, Alex.
Yeah, and this is a situation where supply potentially coming offline is boosting the price of the commodity, and well, if that's your main industry, oftentimes that can be beneficial for you. So looking forward to that conversation, but of course we have tons to get through, tons of EV talk alongside the crude oil talk as well, with Tesla being center stage for FOMO after its delivery numbers over the weekend, and then Rivian, maybe normally more of an opening act type of a name, is going to close out the show for under 30. But let's do upvote, downvote, not endorsements, not recommendations. A name that I believe is headquartered here, correct me if I'm wrong, McDonald's.
It is. So I believe it. I was also going to say the same thing. I believe it is headquarters here. I believe it is in like the West Loops. It's not even that far from here. But McDonald's is temporarily closing its U.S. offices this week as it prepares to inform its corporate employees about layoffs undertaken by the company as part of a broader restructuring. Now, according to reports we did get from the Wall Street Journal, that they said in an internal email last week, U.S. employees and some select international staff should be working from home from Monday through Wednesday so they can deliver the staffing decisions virtually, which I thought was kind of bogus. Like, go home so we can fire you? I don't know. I mean, I guess it all depends on how you are receiving it, but they did say these employees should be canceling all in-person meetings with vendors and outside parties at their headquarters. McDonald's currently employs about 150,000 people across the globe in its global roles specifically, as well as its own restaurants, with 70% of them outside of the U.S. So that's as of their February financials. So McDonald's is a pretty massive company. This is obviously not good if you are one of the employees affected, but typically we see a nice reaction from the street when a company does announce words like restructuring or efficiency. Those are often seen as positives when you're a shareholder. So we are seeing McDonald's shares slightly higher on this session now, just right around their 52-week highs here. So stock looks pretty healthy. Obviously a different picture if you were the one affected, Alex, but I just couldn't get over, like, go work from home to hear this bad news. I mean, that's awful.
Yeah, it's a little strange, but from a market impact standpoint, I think the key headline here is that they are going to be the next in the long list of of big names to basically slash their workforce and focus on tightening that belt loop and focusing on cost cutting and efficiency, as you mentioned. Modestly higher here today, Jenny, but I am going to say downvote. I'm not sure that this story on the surface is a big enough one as of yet to merit much more beyond what we've already discussed. Next one on the list, though, is Intel. This has been a name that it seems like every analyst has wanted to buy the dip in, and all the pundits are fans of this name because of its long-standing important role in semiconductors. But it's just struggled and struggled and struggled for years. It is trying its hardest to stage a bit of a comeback here.
It is trying its hardest, and I have to point out that actually for the month of March, this was the best performer in the S&P 500.
There you go.
So it is trying to have a comeback, and I would say successfully, at least in the month of March, it did. Shares are now up over 24% year to date. Still down, though, over 30% over the last 12 months, which I think paints a better picture outside of its relative strength over the last 30 or so days. But Bernstein today did upgrade shares to market perform from underperform with a raised price target of $30 a share, up from $20. And the analyst did say that while things still look bad, tactically the medium-term setup is finally improving a bit as the company's issues are now pretty well known and the numbers may be low enough to stand. The firm also said it wouldn't want to own it, but they can now make the argument that downside could be more limited to at least the back half of the year. I thought that was the most hysterical way to put, like, you know, caution, but also they could see they're basically hedging themselves here.
Yeah, this seemed to me on the surface a plug the nose, maybe throw in the towel a little bit that, hey, maybe our market call was a little bit too bearish. This thing's had a nice run. Let's acknowledge it, but we're not happy about it. Nonetheless, but I'm going to say upvote for Intel. I think that its price performance over the last 30 days has been just quite frankly impressive, and we'll see if it's made any major breakthroughs on the technical front with Rick in the next segment. Let's go to LVS, because this is a story that I feel like just keeps on coming and keeps on writing itself in terms of Macau's reopening and the impact overseas, of which we know LVS has an outsized exposure to, in spite of the fact that it's literally called Las Vegas Sands.
I know, and you know what? This Macau story, this Macau comeback is one that I'm like, when will this finally happen? Because we've been talking about the Macau reopening now for the better part of the last year and a half. But we are seeing a lot of these names with this Macau exposure higher today, as these like casino operators like an MGM or even Las Vegas Sands for one, but several of these other names that have operations in Macau are gaining after a jump in revenue in the Macau casinos. Now, Macau casinos gaming revenue surged 247% in the month of March, which was sparked by the travel boom by Chinese travelers, according to several reports. One I saw was Bloomberg. Now, gross gaming revenue was about $1.6 billion, and this was per cited data released by the Gaming Inspection and Coordination Bureau. Now, total visitation by mid-March was about 65,000 per day, which was about 55% of their 2019 levels, but is still, I mean, all things considered, when this area was completely shut down, I mean, some of the videos and scenes we saw in Macau were really eerie. So even the fact that they're up to now 55% occupancy here is still something, I'd say, given this is the most pinnacle and I'd say important region to gaming really in the world, just given how massive it is. So good to see that we're recovering some, but Alex, I think this recovery story is still, I mean, we are just at the tip of the iceberg here.
Yeah, not fast enough if you're a casino operator in that region, no doubt about it. But it is coming back slowly but surely. We'll see ultimately how long it takes, and if we ever get back to those pre-pandemic occupancy levels. But what I will say is, when it comes to this type of an industry, it's all about scale, and those margins aren't often that big. So, being well below their capacity is probably not great voting for these companies. Going to say downvote, though, for LVS. Last one here. I think this is arguably the most interesting of the bunch here in Macy's. This is a really, really optimistic call from the analysts at JP Morgan.
It is, and we're seeing a really optimistic reaction in Macy's shares today to that. JP Morgan did upgrade Macy's to overweight from neutral with a raised price target of $29 a share. That's up from $28. This follows meetings with management. You can see Macy's shares are up over 5%, almost 5.5% now on the recession. But this JP Morgan analyst now sees a favorable risk and reward setup at current share levels. With Macy's 2x EBITDA valuation, they said commensurating with Victoria's Secret's takeout multiple in 2020 relative to the 5x distressed retail pre-pandemic multiple average, which would translate into about $43 in equity value. So the firm does now see an attractive entry point at these current levels. Just to summarize, based off an attractive valuation levels, Macy's shares are trading at just shy of about $18.50 a share, or $18.44 currently we'll call it. But Macy's, this price target now implying about $11 of upside, which is pretty significant when you're an $18 stock, Alex.
That's a massive, massive percent. You know, you're talking 55, 60% rally, and oftentimes we know that these are 12-month price targets. So there's optimism from JP Morgan in regards to Macy's. But even more than that, I went back, just looked at the chart over time and tried to, when was the last time this thing was at a $29 price tag? You basically have to go back to November, December of 2021, which, if you recall, Jenny, that corresponds to the absolute all-time high point in the market itself, both the NASDAQ, S&P topping out towards the end of 2021. So this is effectively a call to say Macy's going to get back to where it was when the market was as optimistic about things as they have ever been in terms of valuations. But going to go ahead and say upvote for Macy's. Maybe there's something on the chart that we're missing here that maybe provides more clarity as well.
I hope so, because I think to say Macy's will be getting back to its all-time high and staying there is really a bullish call. So, I mean, I'm hoping to be optimistic in this retail space. But we'll be moving forward today with our two upvotes as being Intel as well as, of course, Macy's. We'll be looking at some technical trends and charts. We'll also be doing some example trades. Stick around. Next Gen Investing. We'll be right back.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. The Platform Demo webcast series is designed to help you broaden your knowledge .
have a situation where you could kind of get the best of both worlds, both maybe keeping that credit and also having a dollar worth of value in that long put, working towards a max profit potential of 175. Not the most likely of occurrences, so I oftentimes think of that kicker as more of an adjustment in the break even. It brings that break even down to 29.25, and the max loss, of course, would correspond to potentially being a shareholder in Intel at the price of equivalent of $29.25. So if you owned at that price, we know you have risk down to zero. That's $2,925 in risk. But again, just want to stress and emphasize that's if Intel went entirely to zero, which, you know, assess that probability on your own. But I don't believe is probably extremely likely, at least in the short term, that Intel were to go to zero. But in the end, neutral to bullish strategy, one that seeks to buy the shares if it goes lower, and that's something that someone would be comfortable with. But if they don't, keep the credit, move on.
Yeah, now to look at a different name, completely different, but we were joking somewhat similar in the fact they're both now competing with some newcomers in their respective spaces. That's Macy's. Macy's seeing a much different move today than Intel, though. Macy's shares up over 5%. But Macy's looking a little bit less optimistic, I'd say, on a year-to-date chart, just given the difficult environment that retail has been. So, Rick, tell us what you're thinking here from the technical front. Macy's, another name that has been well off of its yearly highs, a name that has not been necessarily the best performer in overall retail. It has seen some pretty collective weakness for now, it feels like the last 5 years.
Things were looking quite poor this morning, I thought, before the market opened. We had this report that gave a bit of a boost to everything. But looking at the price action before that point, we had a very abrupt decrease in prices here. We've been trading mostly within this downward channel since early January or so. Then we started breaking out to the downside from that channel here. We had quite a bit of movement to the below that area, so that was looking pretty bad to me. It also looked like our bottom trend line there was becoming resistance to be watching out for there. Before that as well, on Friday, we stopped at our volume profile point of control and also the intersection of that with our trend line right around the 1750 level. So today we're having a break upward that's faded noticeably since the highs of the day, though. And it's also important because we did not really break above that $19 mark here. That's this pink dashed line here. We also were initially above the 21-day exponential moving average. That's our yellow line there. And we're fading below that one as well here. So we did not crack above two significant sources of resistance here. We were failing at those ones. It's up to, you know, anyone's guess what's going to happen into the close here, but perhaps a move back closer to that 21-day exponential moving average near about 1860 or so could be a brighter mark for the bulls there going into this name. And looking at some other areas of support and resistance to the upside, right about here, our 63-day exponential moving average comes in just above the $20 mark. That seems like that could be a point to watch. To the downside, look for that 1750 level that I mentioned before. That's our volume profile point of control, as well as roughly where our trend line comes in here. RSI is still pointed toward the bullish side here, trending upward, but we're not above that 50 mark just yet here. So we're trending upward, I should say, but we're not in the bullish side of the camp just yet here. So really kind of a disappointing move, I might say, from a technical perspective, despite this rather rosy profit projection of the new highs near 29 from this analyst.
I'm actually pretty surprised that we're not seeing some more optimism here, given the 5% move higher today. RSI, though, trending to the upside.
Up a little bit. It's come down quite a bit from
things to look forward
rally,
to. 29 feels like we are so far away from that right now. I guess
it's just dead cat bounce on Gina's.
These are 12-month long price targets, not necessarily, you know, this week or something on a much smaller time frame. But we'll leave it there. Appreciate all the technicals as always. Rick Ducat, our chart
positive
master.
Or even negative,
so
like bankruptcy.
Trading this name, following this
or
really enthusiastic note today from JP Morgan. Walk us through your thinking, then leading more bullish in nature.
Yeah, I looked at something that is a little bit more bullish.
Yeah, next thing we're looking for on Bitbound,
so it really
technical wise, is just this again, flat.
The trader who's thinking maybe this is day one.
Unless if you get, of course, a news catalyst that causes it to rip.
Whatever it may be, rally in a name like Macy's. It's called a risk reversal. It simply consists of selling a put and using that credit to essentially finance the purchase of a call. Typically, this is done with an out-of-the-money put below the market and an out-of-the-money call above the market, and usually done either for a small credit or near zero in order to kind of offset the cost of that call in order to have a break even that is below the market. That's what we looked at here. Just simply going out to the April monthly expiration. That's April 21st, 2 weeks from this Friday. I looked at selling the 17 put and then using those proceeds or that credit to essentially buy the call that's very comparably priced, and that would be the 20 call, or at least that's where it was before the show here. And so this is a really interesting risk profile, Jenny, because if it's done for a zero price tag, you're going to actually have a break-even range between those strikes. So
you guys are crazy, man.
Above 17, but below 20,
averaging down on BYs.
Both the options would expire for zero, and you paid zero for it, not accounting for transaction fees, of course. So just really no harm, no foul at expiration, assuming that they both did roll off and there was no assignment or exercise. Where things get interesting, of course, is to the upside, uncapped profitability.
Were you being sarcastic?
Penny for penny above $20 a share, so you're going to need a move. But it can, of course, really benefit if you do get that move. But of course, there's always that counteracting force. So whenever there's a pro, there's often a con. In this particular case, that is penny for penny risk below 17 all the way down to zero, and potential risk of being assigned on that put and being a shareholder of 100 shares of Macy's. So you probably wouldn't consider this unless that was something you were willing to stomach. But 1,700 risk theoretically, because if you bought it at 17, goes to zero, that's what it adds up to, is 1,700, Jenny.
Yeah, I think that's really well put. And of course, I think important not to discount the nice move higher, up almost 6% on the session now, Macy's shares. So wow, really nice way to start the week for that retailer. But also important to keep in mind, for both of our example trades today, they do contain multiple legs that can lead to higher transaction fees. Short options can be assigned at any time, and carrying option positions into expiration can add risk like unanticipated exercise or assignment. Now coming up next, it's time for our FOMO segment. We are looking at a move that is completely the inverse of Macy's. That is all things Tesla. Shares are down over 6.5% in reaction to their first quarter delivery numbers. We'll dive more into those coming up next.
Blackstone has again blocked withdrawals from its $70 billion real estate income trust in March. Yikes. I'm moving down. Google to cut down on employee laptops, services, and staples for multi-year savings. Wow.
WE and Endeavor combining into one. Tell us more about it.
Yes, they are combining into one, and they're going to create a $21 billion company combining these two iconic brands. But stocks do not seem too excited about it today. They're both selling off more than 3% each, probably a little bit more by now. But as far as the new company that will come out, is that at the close, Endeavor will hold 51% of the controlling interest in the new company, and WWE will take on 49% interest. And the values of it, it'll value UFC at $12.1 billion and WWE at $9.3 billion. But how have both entertainment companies' performances been lately? On a combined 2022 fiscal year in basis, UFC and WWE achieved revenue combined of $2.4 billion and a 10% annual revenue growth rate since 2019. Not terrible considering the impact of the pandemic on the entertainment world. But the new company is also going to be led by Ari Emanuel, who will also continue his role as CEO of Endeavor. We know him locally in Chicago as brother of former Mayor Rahm Emanuel, former Chief of Staff of the Obama administration. And so Dana White will continue in his role as president of UFC. Nick Khan will be president of WWE. So a lot of changes there. And together they're expected UFC and WWE to deliver an estimated between $50 million and $100 million in the annualized run rate cost. And so to combine this, you would imagine they want to get rid of some duplication of efforts of back office people, of managers. So we can expect things like that to roll out probably in the next few months.
Yeah, and Renita, I can't say that I'm necessarily super honed in on the UFC WWE world, but what I do know is that WWE, at least from a stock performance basis, is up 40% over the last 12 months. I mean, this has been a name that is so loved in this media world. So outside of my own thoughts and feelings, I can't acknowledge the outperformance and the high demand for both of these names, really.
Absolutely. High demand. And it just is interesting to me, how are they going to combine successfully these two powerhouses, right? Is one going to drown out the other? And also another thing, the case for antitrust concerns, who knows if that will come up among regulators, because they do have two distinct sports that they compete in, and they are seen as complementary to one another and not necessarily in competition.
Yeah, it will be really interesting. And I have to say that, you know, between Ari Emanuel and Vince McMahon, I mean, I feel like there's a lot of egos there. So we'll have to see how that will work out. But
absolutely,
it'll be an interesting story that will continue, I'm sure, to be covered here at the network. We'll leave it there. Appreciate all of your insight, as always, Renita Young, Senior Markets Correspondent for the network. Let's bring back in Alex now, and it's time for FOMO. So naturally, we are talking all things Tesla. And I believe it was actually Friday we were saying this would be a more ongoing story, perhaps maybe more interesting Monday once we got those first quarter delivery numbers Sunday. And I think that's true, and not necessarily in favor of the bulls here. Shares have been down pretty much 6% or greater throughout today's session.
Yeah, I talked with Kevin about these numbers, and it's just like a classic situation where they beat what the street thought they were going to do, but they didn't live up to the lofty bar that Elon Musk kind of laid out in terms of guidance. So it's sort of like, is it good or is it bad? And the market seems to be waffling with that. But as you said, Jenny, I mean, the stock's under pressure today. So undoubtedly, it seems the bears are winning today's battle with the stock down almost 7%.
Yeah, and I was diving into some of these first quarter delivery numbers. As you can see there, they total just shy of 423,000 units in terms of their first quarter deliveries. This did mark about a 4% increase from the previous quarter. It was also up over 36% more than the same period a year ago. It marked a really solid third consecutive quarter now of expanding sales following a really difficult 2022 for the stock when they were hit by a lot of these COVID-specific restrictions in China. So there is that optimism then fueling the bulls narrative. However, fueling the bearish narrative here is that Tesla did keep its growth on track only because they were able to pretty massively reduce their prices. The price of their Model Y now is about $11,000 or 17% lower than it was at the start of this year. In China specifically, that vehicle is about 21% cheaper than it was just in September. So production did exceed deliveries by about 4%, but about half of the quarter's mismatch is still pointing to some of these rising inventories. So that is not necessarily the most optimistic tone. Tesla in recent months has really doubled down on its original mission to now grow as fast as possible, not really taking into consideration the cost or some of this deteriorating sales environment, which they did acknowledge, I will say, at their investor day, but they do seem to be really pumping out growth here. So, I mean, the question is how this affects their margins, what cost this will then be to investors and shareholders.
Yeah, that's what I was saying. It's the price is too low.
Earnings altogether.
Price is too low to be diluting.
19th, which is coming up
so
rather quickly. I was joking.
Reverse split and then dilute.
Again, thank goodness. But Tesla shares
or they're
are
expecting
still
to
up
rip
58%
and then they can
for
dilute.
this year, still up 98% from their yearly low. But today's
reverse
move,
split
not
dilute
exactly
or reverse
the
split
reaction
rip
you
dilute.
want to what was I'd say.
But yeah, that was my initial thoughts
of
of diluting, but
it just wasn't
people
good
are saying,
enough.
oh, it's
And
too
that's the
low.
theme of
I didn't really think
So
about that.
here's what I find just so unique to Tesla. We talk about its polarity and how there's the haters and then there's like the worshipers of this company. It's literally that
Haters
polar.
gonna hate.
Listen to the analyst reactions to my knowledge, the main headline. It was objectively, this is the numbers, right? We have Barclays, Baird, both in outperform or buy equivalent ratings. We then have Oppenheimer and Citi in neutral equivalent ratings. And then you got Bernstein and underperform. So we got one piece of news, one major piece of news. Tesla's always making news in many ways, but one major update from the company and no one budged, not one adjustment to anything. And those are literally the three different choices you have. It's either gonna go sideways, it's gonna go up, or it's gonna go down. And you got something for everybody. I love that about Tesla. It's this giant tug of war. And depending on the day, sometimes it seems like the bears are winning. Sometimes it feels like the bulls are winning. The long-term battle, I guess.
Yeah, they don't necessarily have to do it now. I mean, I don't know to pay bills they might have to.
Super short-term seems like it's been the bulls, except for today.
Now that they got rid of their
whole
other credit facility deal with their warrants and preferred shares and all that money coming in.
Like people get so mad when there's like price
seems like that probably needs
so
something
outlandish, not even listed there, and then like a $150 price target from Bernstein, which is, I mean, obviously well below where we're currently trading. So I love the controversy that Tesla numbers bring and the way that you can interpret them in so many different ways. So always a good story, but when trading this name, Alex, I do think that, like you said, in the near term or mid-term, it has been somewhat in the hands of the bears.
Yeah, the market itself is a little bit weaker today. I think we looked at this last week from a very optimistic standpoint, so I wanted to do it justice and look at something on a more bearish standpoint here today for FOMO, given that the stock is under pressure on today's session. What I looked at was buying a put condor. So the idea here is to use vertical spreads to reduce the risk, decrease the capital exposed in something, but still create a risk profile that will benefit from a desired outcome that you believe may take place. And so in this particular
it's kind of interesting insiders that own it.
At the time, the stock was trading around 195. It has sold off, a little bit from there. So bear that in mind.
Not insiders, I'm sorry.
With the strike selection
institutions.
Here. But
and the fact that insiders haven't sold, but maybe they're not able to.
The 192.5 put. That's the first key crux to this strategy.
Yeah, you do wonder why.
$5 wide debit spread. That's the meat of the strategy ultimately. But then going a little bit further,
you don't wonder why they're still holding it.
And going down
it's a tiny position for them, but still.
$2.5 wide put credit spread.
Birds, hopefully found a bottom.
Potentially giving up a little bit of that
I jumped
upside
in.
if the stock
I got
goes
excited
down
right here.
in order to reduce the risk, raise that break even, because this is a bearish strategy, and look for sort of this middling area between 175 and 192.5 is your best case scenario here. So with this one, you can see I think the risk profile does a good job of highlighting what exactly a trader with this type of strategy would be looking for.
Done a little triple bottom here.
But it is set up intentionally so that there is no theoretical downside. If all of these options were in the money, they would simply offset for a price that would correspond to a $50
This thing moves so fast. I thought I was going to get squeezed this morning.
If they did this at $2. So
I still think it's probably going to be a good
in order to not take theoretical downside risk, is obviously it's a bearish strategy. If you can overshoot it to the downside and lose money, you'd be kicking yourself. oftentimes in that situation, Jenny. So if you're going to do a bear strategy, might as well potentially profit in the case that the stock actually moves lower.
Yeah, and I mean, we're only seeing this selling start to steepen here into this end of the session, really, with shares down almost 7%.
I traded it yesterday. Like I did the same thing, kind of bought in the morning when it was starting to rally.
We did see a nice relief rally.
But yesterday played out a little different. I was able to actually sold it on that double top.
Pretty significantly over the last
today
12 months, just given some of that weakness we saw into the end.
I mean, holding up nicely. Consolidating here.
For our
24 cents or so.
Tesla all day long. Coming up next, though, we will dive into energy.
So the next level is breaking that 30 cents, which is a big level actually. And then you've got 35 here and 40 basically, 35 cents.
Caroline Woods coming up next.
So yeah, just try and get as good a price as you can, I guess. Yeah, we were watching GFAI. Looked like it wanted to break and then it didn't. Never went, but looks really strong. Got its nice bull flag and consolidation over the VWAP. So, yeah, right here I was like, I think it wanted to break and then not yet. So, might though before end of day. If it keeps holding VWAP, that's a nice entry for long, and then kind of a stop loss below it, I suppose. But for that would trigger you. So, lower than that maybe. And Matt's still going. Oh wow, yeah, there you go. Yeah, if you got in at this point, I mean, it is up a lot, but intraday it looks strong. I would just plan to probably sell it today if I jump into it. Probably not try and hold it. But even the move from VWAP, if it gets back, you know, if it retraces to VWAP, even this little move, that's like 10%. So that's legit. And this up here, 23%. So just the intraday move, the channel that's making even there is a big gain.
It disagreed with OPEC's decision. It has continuously called for production to increase, really to keep gas prices low. But keep in mind, the U.S. was supposed to be a potential buyer of oil this year. They said that it would buy back oil for its strategic petroleum reserves, the SPR, when prices fell to about $67 to $72 a barrel. We didn't see that. Just recently, Energy Secretary Jennifer Granholm said that it would be difficult to do this year. That was just late last month, so I don't believe that they actually did that when oil reached even lower than that $67 to $72 a barrel level. So, lost a potential buyer there, at least for right now, which also doesn't necessarily bode well when you want to keep oil prices lower. No surprise, though, that we are seeing oil prices jump today on this news. Just kind of running through my watch list. BP is up 5%. Chevron up a little bit less than that, up about 4%. Also seeing a 5%, more than 5% jump for Exxon. Shares of Total Energies up 7%. Occidental Petroleum, we know that's a Warren Buffett favorite, up 4.5%. So good news for oil stocks, but as I said, not necessarily good news for global central banks that are really trying to rein in inflation. Also ticking higher, expectations that the Fed is going to hike rates by 25 basis points at its next meeting in May. We're seeing the CME FedWatch tool up to about 60% right now think that we're going to get a 25 basis point hike come May. So not necessarily good news for the inflation picture.
Good stuff. Yeah, I mean, competing interests right now. We got one side that wants higher oil prices. We got one side that wants lower
your
oil
lavish
prices.
Pool and your
naturally, we're going to get the back
crazy
and forth.
Border hopping lifestyle.
Crude oil stocks, loving it today. I haven't looked at a full heat map, but I can promise you there's a bright green area, and that's the energy sector. Caroline Woods, appreciate
Tesla's
the update.
really flushing today, huh?
Senior markets correspondent for the TD Ameritrade Network. Coming up next, back to the electric vehicle space. From one alternative energy company to energy, back to alternative energy. We're talking some Rivian with George Chilla. Stick around. We'll be right back.
I need a video to just get a big drop. They've got earnings coming up, actually, don't they? I just covered earnings. Got till May. They're in a game show like Bozo the Clown? That's crazy. Yeah, I don't know. Gaddy moved up from 10%, 12.5. $45 bike. EVTL at VWAP. I knew this was coming on Monday too. I totally should have just waited. Thought I knew a lot of hype on Friday. I'm like, eh. Oh well. I'll hold. I think it's still good. I still like all these charts.
following some of their delivery numbers. So here to tell us more on why we're seeing shares lower today, I'd like to welcome in Kevin Green, senior markets correspondent for the network. So Kevin, we know that Rivian is based right around where we're both from in Normal, Illinois, good old Normal, Illinois. But this name has been unable to please investors for quite some time, with shares underperforming this year and really over the last 12 months.
Definitely. The company has had some issues with obviously production itself, and then also the supply chain issue on trying to source the items needed in order to create these vehicles here. And we are continuing to see the company come up a little bit light when it comes to not only its production numbers, but its delivery numbers. They actually reported production coming in at 9,395 vehicles for the quarter. The estimate for the street was around 10,000 vehicles, and they also delivered 7,946 vehicles. The street was looking for deliveries to come in at around 8,000. So missing on both of those metrics here, and it has had a tough time to say the least here, Jenny, because they haven't been able to scale up proportionately in order for their business to be able to thrive. And what is also occurring at the same time is that there's supply chain disruptions that they've had to source materials is also coupled with their ability to deliver the vehicles in a manner that is going to be cost effective. So that's also eating into their margins, and they have a fair amount of stock compensation that is being leveraged as well. So overall, we are seeing the shares move to the downside. It has not been able to catch a bid, but when you talk to some of the customers that actually have these vehicles, they are actually very nice to say the least here. They are very confident in the company, but they do have a lot of frustrations when it comes to waiting on their car or waiting on their truck to be delivered. And that is just something that Tesla has not had to really deal with. And we are starting to see another trend here where production is starting to outpace deliveries. A traditional automaker usually has that type of dynamic, but we have been so used to Tesla having more deliveries than what they can actually produce, just signifying the strong demand that they have for their EVs. Now that is starting to slip here a little bit, and now we are starting to see that hit not only Tesla stock, Rivian stock, but other EV players in the making here. But there's some other things coming down the pipe. If you are interested here in the EV space, it seems like the battery situation is going to be the next hurdle a lot of these companies are going to try to face. Instead of trying to source some of the natural resources that are fairly expensive, they're going to try to find some other materials to be able to build out their batteries, maybe even domestically, so customers can actually take advantage of some of these tax credits here. That would also provide them a little bit of a boon when it comes to deliveries and customer demand, as well as potentially expanding their margins, if you will, if they're able to try to source their materials at a cheaper cost.
You know, Kev, when I start thinking about this space, and I'm going to preface this by saying I'm the farthest thing from like a Tesla Super Bowl. The more we learn about how these other companies that are up and coming are faring and their attempts to do what Tesla has objectively already done and round that corner to a pretty scaled up business, a multinational global production line, as well as profitability. I mean, you can't help but tip your hat to Elon Musk and company. Some of it maybe right place, right time, sort of first to market kind of situation, lower rates during the time they were getting this stuff done. But I mean, if Tesla's being called into question here, is now the time that investors are really running to queue up to buy these other names? And of course, when you talk to some of the legacy names, they're more defensive investments at this point. They're ventures into EV. They're just trying to protect their market share. You know, how do you assess this space as a whole when it seems like Tesla, valuation aside, from a company and execution standpoint, seems to be the only one you can really trust?
And that's a really good question here, Alex. I think moving forward, it's going to be based on the design and the availability of different type of vehicles that are out there. When we talk about EVs, right now it's really been focused on the sedan or the car type of space, really. But Rivian is trying to kind of shift it here to go into more of trucks, and trucks that look more like the traditional automakers, the F-150s, things of that nature. So I think that's what's going to really differentiate a lot of these EV names. Yes, Tesla has done a phenomenal job forward with capturing market share here and trying to expand, and they have the pricing power. We have seen it over the last several months. They continue to cut prices. That not only sparks demand, but it also causes some of their competitors to cut their prices as well, and they just can't afford that margin compression at this point in time. But you just always have to kind of just keep in mind, just because Tesla or any company for that matter, we could talk about energy companies, we can talk about consumer staples, the one that is the first one out and the one that gains market share, it's not necessarily going to be the one that's going to be the king of of the marketplace in the long term. We have seen the same thing happen with like Sears, right? Sears, no one ever thought that Sears could ever go under, and then Walmart and Amazon came up and they were able to provide a better product at a cheaper cost and be able to deliver. It's just a little bit of an example. So yes, they are doing a phenomenal job. The valuations can be a little bit questionable, but that premium is built in there because of their ability to be able to perform here. And if they continue to do that, they should be able to gain market share. But at some point in time, Alex, they're going to go from a growth player to being in a defensive space as well. Those other automakers, especially the traditional ones, they're playing in the defensive space because the majority of the cars that they sell right now are still internal combustion engines, and they've been able to capitalize on that market. They don't want to give up market share. I think Tesla's going to be in that same type of position here in 10 years, 15, maybe even 20 years from now. So it's always interesting to see how the business cycles change from growth company to then being a little bit more mature and then trying to be able to defend itself from others coming up into the business that could provide a better model or provide a better service that could undercut the business.
Yeah, Kevin, really great takeaways here. As I do think this space is one that is so interesting, but there's still so many unknowns, especially when looking at a newcomer like a Rivian. Still seeing shares down over 3% today, so not as bad as Tesla's move to the downside, but not exactly welcome when you're down over 18% on the year. But we'll leave it there. Kevin Green, Senior Markets Correspondent for the network. Appreciate all of your thoughts as always. That also does it for Alex and myself for Next Gen Investing. We're pretty much ending right now the session where we started this show, but coming up next we have the watch list with Nicole Pedalides.
Still up? Yeah, there's still like Sears stores around. Still trade on the OTC also. Someone in YouTube chat was super bullish on Sears and they still hold it. Like, oh wow. I bought it when it was like squeezing. Actually made some money on it, and then that's when they came out and said, oh, we're gonna shut off retail from owning these OTC stocks. And it was literally like the next day they did it, and I was like, oh, I gotta get out of this thing. I wasn't sure if I was gonna be able to sell it, so I got out and I get back in. But yeah, they just basically shut off the buy button for all of them for individuals. They still have like a lot of assets. A lot of real estate, I think, buildings. Morning, Jonathan.
But the price target's at $30 a barrel, up from 20. However, that's still about an 8% move to the downside from where it's trading now. Now, Bernstein says that things still look bad with part of the stock's outlook. However, the medium-term setup is improving a little bit, and that the current levels are more likely low enough to stand. Now, while Bernstein said they wouldn't want to own this stock, they can now make that argument that the downside could be limited, at least in the second half of the year.
Yeah, well, that's the whole thing. And I think that's really what you're saying is the story. The fact that they were so bearish on this name, you know, saying that Intel's, you know, issues are known. The Bernstein analyst has now moved it to this market perform rating. But the fact that this was a long time bear, but they have this call and now
20%.
I think that's a
Guys, come back down to VWAP for now, at least.
To us. Thank you so much. Intel year to date up 24%. Nice move. Renita Young, thank you.
Thanks.
Let's take a look at the bigger picture. Randy Sepsik's with us, President, Elite Group Retirement Services. Thank you for being here. So let's talk about the outlook here as we wrap up this first quarter. We've seen a recent rally, a lot of volatility. What about recession?
Hi, Nicole. It's great to see you again. I guess the nature of retirement planning, which is what I primarily do, is we plan for the worst first. So I feel like every time I come on with you, I'm a little bit like Chicken Little, and the sky is falling in. So I'm going to try to mix in some positivity today, along with some warnings in regard to what to look out for.
Yeah, so I look forward to hearing more about the warnings. As we look at the different groups here, I think that a lot of it is all affected by how the Fed will react. We have a jobs report this week. We'll have a lot of earnings starting next week. What do you think the Fed is watching? Because we already got PCE and some of the other data from last week.
It's interesting because I think the Fed right now is probably more closely watching what's going on with banking. I've seen banking kind of take almost a back page step here, but the news that's going on inside the banking issues are really interesting because I think the Fed is going to have to react on banking in conjunction with interest rates. So, for instance, just give you a couple statistics on that. Americans withdrew $98 billion from their bank accounts in the first quarter. 16% of that came as a result of the SVB and the Signature Bank closures. So couple that information with the fact that during this calendar year, we already have higher interest rates, but $270 billion worth of commercial real estate loans are coming up for renewal, and 70% of that is held by smaller banks. So there's going to be a coming to reality moment for the banks when it comes to these loans.
There's 3 of them.
Yeah, and that's the whole thing. I think as we look at this group, there was a lot of nervousness pertaining to contagion. Do you think we're sort of past that? And I know that insurance stocks are now somehow coming under the microscope. One of my guests said the insurance stocks are perfectly fine, and so are these financials. But what are you thinking here?
It's the, first-time deposits have declined for the first time since 1948, and I think that this obviously is going to lead
coming down a little
to
bit here.
lending standards, and couple that with the weak consumer confidence, that could be the catalyst that takes an already weakened economy into a deeper recession. So I saw Nouriel Roubini had just said over the weekend that judging the banks by the quality of their capital, that most U.S. banks are
I did like your Baba call.
Remember
I said it looks nice.
And hundreds are already fully insolvent. So
did you ever get back in this?
We're not getting the full picture on what that is going to do to what the Fed's
said it was good, and then you jumped out right here, and I was surprised because I thought the move was going to keep going.
At this point,
and
tell me about the different groups, because you have some thoughts on real estate, for example, and consumer
day trading or something.
Yeah, so
AI
right now they're really in a bind.
Yeah, no, this one I said I don't like unless it breaks out, so I like it now. I thought it was triple topping. I wouldn't have gotten in at that point, I guess.
Is at its lowest level since 1983.
But basically, an undecided trade where I wouldn't enter. Just wait.
So I believe that sector is going to really stall
You're
and be
back in a
standstill for the foreseeable future.
Right, understood. So what would you tell investors so that this way they don't miss moves or thoughts that you have?
Well, I'll tell you a couple of things to really watch for is watch energy. So is OPEC's announcement to drop an impetus to the U.S. markets to ramp up? So since crude is on the rise, is that a sector trap? Or is that something that is going to be the thing that really moves our government for more permits and drilling to do work within our own borders? So that's one to look for. As always, the tech sector is one to look for. As that recovers, just because of its sheer size, the market will react with that as well. The one thing that you mentioned earlier was insurance. And one thing to keep in mind, insurance just isn't property casualty. So insurance is doing a lot of work to replace guaranteed income sources. So if you look at last year, insurance moved almost $1 trillion in retirement assets into fixed income or to guaranteed income annuities. So that signal is that the retirees are already reacting to longer lifespans and underfunded retirements. That could be a boon for the insurance industry.
Right, right. I know you're not able to pick exact stocks, but I will say to folks watching that last week we had on Ted Weisberg, who liked the insurance industry, mentioned Chubb in particular as his favorite, but there are so many great names. I mean, Travelers would be one in the Dow Jones Industrial Average, but he did mention Chubb was his favorite in the group. When you talk about financials, I mean, even that is sort of a broad brush. What kind of financials do you like more than others? Is it the big money center banks? Is it the regionals? Is it, fintech? I don't know. You tell me.
The money center banks are going to be the big ones. As you saw with what happened with UBS and Credit Suisse, UBS announced that they are laying off roughly 30% of their workforce, which is going to help them in the long haul, since they saw Credit Suisse is having a lot of fat in the workforce. And so you're going to see UBS do well. I think these bigger banks are going to be solid. But I would watch in insurance companies, I would watch particularly the ones that are investing in retirement income planning assets. Those seem to be the ones that are going to have a larger rise, as opposed to the property casualty.
Right. Randy, nice to see you. Thanks for being on the show. Randy Sexton,
thanks so much.
President, Elite Group Retirement Services. Thanks for being here. All right, later this hour, Woodbush's Dan Ives. He'll be with us. He'll tell us the very latest on Tesla after the company reports its quarterly deliveries, what we need to know. And we will dive into investing opportunities in carbon.
GM said first quarter sales rose to 603,000 vehicles from 512,000 a year earlier. Wow. People are still buying cars. Sammy Donuts approaching 300. It's a win-win. I like it. That way I don't even have to play it. 300? Pretty aggressive. That's like a short squeeze on Meta. Guess you've got some time. I mean, the price action looks bullish. RSI scares me a little bit. Oh, I guess that's not a divergence there, just here. Yeah. Hugs for all. Big hugs. Following up that play. GFAI might be breaking out here to the upside. Getty's breaking out. 15.5%. His laughter is priceless. Truly. Belly laugh. GFAI looking like it wants it. Ah, SPRO. $165. Ah, man, it came back down, huh? I like to see that it bounced here. Maybe we'll see a double bottom. 184, 187. 165 level. I don't know if I'd like that. I kind of want it to hold up here for this inverted head and shoulders. Yeah, you've got a little head and shoulders up here. Bearish MACD. It's, yeah, I mean, it's definitely consolidating today. I don't. Yeah, this inside bar and then a drop below that support isn't a great sign on the daily. I'm still holding it though. I want to see. I want to hold these levels. I might cut loss if we really break and hold down here. $72 to 800. Uh-huh. So you don't like my Nvidia put, Owl?
At the same time, there is some pent-up demand. You know, first we moved everything forward through COVID, then everyone stopped spending, prices went up, and now all of a sudden we're getting to equilibrium, right? We're seeing with the car companies, yes, it's expensive at the same as expensive, the leases and the purchases, but the prices are dropping.
Yeah, and as we think about this, you know, something like housing, you know, we talk about autos and housing, and even housing prices have fluctuated recently as mortgage rates came down. There was more interest in housing. There's not that much supply in the first place, but things are generally still pretty expensive, but as to your point, inflation coming down. So let's talk about what an investor is to do, because I think after 2022, they felt pretty beat up. Right?
That's right, and then to go right into this fear of a financial crisis in terms of the banking crisis, and I think
I got pretty far out of the money because they're so expensive.
That has really been stemmed, and it's understood.
I don't know why I didn't get spreads actually.
We are not having anything like a Lehman moment.
Yeah, why didn't I get a spread? I don't know. I just decided to get.
And that, you know, it was very particular to these banks. We will
I got
see
235 for
but
May.
What should an investor do? An investor should look for opportunities. Many
so,
of these regional banks
kind of aggressive.
that will be
I'll probably be a volatility play and not Not trying to wait for it to go in the money.
In particular, Fulton, FULT, that's based
See what the jobs report is on Friday.
$20 billion.
Maybe close it next week.
We see a bank like that didn't fare well during the crisis, and numerous banks really catching a bid going forward. We think that on the tech side, because tech is really what gave us such a great quarter, right? Technology came back so strongly. We might see a hiccup there, and we're going to see some rotation. Now, luckily, some of the oil companies that were looking really bad because of the news that you're
the chart's like kind of similar to Meta, though. I guess you're playing Meta on the TikTok thing.
By OPEC. And prices rise.
Like
that's only going to help some of the oil companies out there, and it's helping them today. And so for those who are in oil or in LNG, stay the course. We're not going to get $100 barrel oil, but we could see oil come back and stay stronger than it was.
We might get $100 barrel oil.
That being said, he said that people should. This is not 2008. This is not that big moment. So in the meantime, I know you have a few stocks to focus on. So you had Roku here and Mobileye and Hubs, and then we'll get to the energy names too. But tell me a little bit about some of those names.
Well, I think Roku had such an incredible 500% meteoric rise, then came back down, kind of the equivalent of like an Apple TV, assisting with being able to stream.
Yeah, when people hold out on
the
data
coming back and some of those smaller names because it was really those bigger tech companies
agree or disagree. Okay.
So that's why. So we're really looking there, and then on the
it's like Linux. I don't know where he gets it from, so I don't know whether I agree with this thesis or not.
The IPOs that have come
puts out random dates and price targets. Totally arbitrary.
Nextera NXT, which is really doing well because it's watching the solar. It's helping the solar companies on the institutional level follow the sun, and so many people missed out on that one. We still believe Mobileye, MBLY, it became forgotten when it was owned by Intel, and assisted driving is really the answer going forward.
And you had HubSpot on there too.
Yes, so we see HubSpot also doing very well as some of the companies like Trade Desk and some of the smaller tech companies that are considered tech companies, but really the baby was thrown out with the bathwater.
And that happens.
Yes.
Tell me a little bit about Atlas Lithium. That's one that you had on your mind.
You jinx it. What you tell people
it's up
about it?
134% already.
Okay, and still a low price stock. Under $10. Now, what we'll say on Atlas is this is a lithium company, but also in titanium as well, rare earth metals, but based in Brazil, an area of Brazil rather than the traditional places where we see lithium being mined. It's true. Lithium is so important to the manufacturing of these batteries.
Superstitious,
and battery power is going to be even more and more important as the large grids try to harness the energy of solar and wind, and it's going to be harnessed in institutional, industrial-sized batteries, as well as, let's just face it, I mean, Tesla's been big in the news today, but at the same time, all of the car companies are on the hunt to be in the electric vehicle market, and lithium is going to be important there.
Are you thinking when you see names like Tesla or Apple, some of the big names, Microsoft, or I don't know, the AI names, I mean, the most popular names, do you like some of those, or it's better to be a stock picker, even though you're bullish, big picture?
I'd still be a stock picker, and if you said I could only be a
I don't want to get T+2. It's not like
always ends up being
close
Goldman
much on
Sachs,
Friday, but
GS. It always comes back to
Tuesdays we do get runs on GME regardless. It seems like it is going to run. It could very well start on a Tuesday, so maybe.
Goldman gains.
I mean, we didn't. I was surprised we didn't get anything from this gap up.
Incredible balance sheet, Nicole, and they
that was ridiculous.
And really do some diving into the dumpster and turn it into gold.
Yeah, I mean it goes. I mean,
because this Friday,
recent high in November, it's still higher than it
this
was
Friday.
Back,
that was Friday. That was Monday. Tuesday. Got nothing from this gap.
Right. But it's going to be even higher, and we have restructuring. Goldman's the way that everyone's going to go.
Hillary Kramer, founder CIO of Kramer Capital Research. Thank you. Coming up next, Wood Bush's Dan Ives will drop by and he'll tell us all about his thoughts on Tesla and the latest deliveries. That's next on the watch list. We'll be right back.
Shh.
Hear more about whatever else it is, the Cybertruck and the semis and Mexico and batteries?
Well, yeah, and I think they showed the
GFAI
bench,
made it.
down in Austin.
That's
But I
the
think
way. Look at that.
ultimately this really lays out what the next models are.
Looky.
Cybertruck, and then I think going into next year, the sub
out.
$30,000 vehicle. I mean, that's really key to hitting the masses as this EV arms race is playing out. I think you take a step back. This, along with Apple, in my opinion, the two most transformational companies in the market. I think that's
22.
also why this is a stock that's just had a massive rebound this year.
Yeah, 21
despite
and a
many
half.
yelling fire in a crowded theater.
All right, so let's talk about Apple. Apple's run up from 124 to 164 now. Your thoughts here?
Yeah, I raised price target today to 205 because units coming out of Asia are still stable. We're not seeing major production cuts. I think that's important in terms of where iPhones lay out this quarter. I think China has been ahead of expectations despite a lot of the noise. And this is a Rock of Gibraltar stock, despite what we're seeing in a cloudy backdrop. I think Apple ultimately will yet again retain the $3 trillion market cap during 2023.
I'm already hearing about the Apple iPhone 15. What do you think people are looking for this?
Well, I think that's going to be the anniversary phone's important because I also think there's going to be a lot more AI functionality included in that. It's an anniversary phone, so I think it's going to be significant in terms of what the demand story looks like. And they're keeping, I think a lot of details sort of under wraps. I think the bigger thing in the near term is worldwide, WWDC, Apple's developer conference in June, where I believe that's where the Apple Glass, or we'll call it the AR/VR headset, ultimately gets unveiled.
Yeah. And in the world of AI or Apple TV or anything else that they do that's not exactly the phones, I mean, the wearables have been very hot. We know that. But you do have, you have the ecosystem, but, the titanium cards there's so many different parts of Apple. I mean, do you see them just expanding more and more?
Well, it's that install base. I mean, they have a golden install base, which enables them to navigate turbulent macro. Because I think as you have those products that get introduced, 25% of the install base haven't upgraded their phone in 4+ years. And they're just
BBBY getting back to its lows of the day.
And products into that over the coming years, which is why I
believe
it's still an underappreciated story. And I think more and more tech's becoming the safety name.
Like in the dip by Baba, yeah.
Yeah, you said the golden install base, that's the linchpin to your bullish thesis, even in this murky economy or shaky economy. So you have it as this $3 trillion company. What's your price target that you raised
golden
today?
pocket is at 61.8.
Dan Ives target?
Yeah, so 205 is our base case price target, and bull case, or
further down from here?
Yukon Hurley price target's 225.
SPY my biggest play. I don't have any plans SPY.
Great to see you. Thank you.
Managing Director, Equity Research at Wedbush. Thank you, Dan. All right, still ahead in the second half of the show. We're watching McDonald's all-time highs. We'll find out what is going on.
Have a little further to go to hit that.
What makes it move today. And as we head to break, take a look at some winners and losers in the S&P 500.
And Matt kind of broke out there. Got a sell wall at 1920. Orders just disappear and reappear though. A spoof ordering. I'm moving up. Gonna go on green. Yep, it's rallying up with this SPY. Microsoft. All those doing it. Apple. Tesla's even getting a little pull. Look at that. Yeah, SPY's green. There you go. There you have it. Tried to get this long, but E-Trade was messing me up. Not to say I would have held it through all this, but was kind of looking for a dip buy today. Seeing that we're still rallying and we haven't hit the resistance yet. NVIDIA. Oil's just held solid up there. Flat on the day. Dollar's dropping too, so rally could keep going maybe.
Since 2020. So here we go. You know, the S&P at these levels at 4114, up 5. The Dow at 33,567. That's up almost 300 points. The Nasdaq, though, is down 0.75% at 13,082, and the Russell at 1791, down more than 0.5%. Now it's time to check in on developing stories. Let's bring in Jenny Horn, markets correspondent here on the TD Ameritrade Network, to take a look at those McDonald's shares and new all-time highs.
Yeah, I was reading that gas usually bullish.
Definitely to see a name at all-time
April
highs.
and May.
I actually had to
Oil the
check
same
the
way.
max time frame on the platform just to make
You
sure
know,
I was
like,
seeing that correctly. But no, we are
fuel
pretty
prices
much
usually
at
go up in
all-time
the
highs in
summer.
today's session, especially as you can see there on the chart. With shares
Suppose
only
that's
up about 1%, and this follows news.
that.
They are temporarily closing.
I don't know, I feel like
their
demand
US
destruction
offices this week as they
and
prepare to
the
inform
market coming
their
down
corporate employees about layoffs that are being undertaken
to
as part of a broader company
be with oil.
restructuring. Now, according to various reports, we've gotten the chain sent an internal
And the fact
email
that it's
last
kind of
week
a
to its U.S. employees, as well as some international
consistent
staff, that
top.
they should work from home Monday through Wednesday.
I almost
so they
wanted
can
to get into a
deliver
short,
these
but
staffing decisions
oh wait, this is the first day of
virtually.
that
The company asked its employees then to cancel
supply
all
cut
in-person
news or whatever.
meetings with vendors and outside parties at its headquarters to react accordingly. And McDonald's does employ about 150,000 people at their corporate roles as well as their owned restaurants, with about 70% of them located actually even outside of the U.S. per the chain's financial statement as of February. So this is a pretty major story, although I have to say there's a few critical details that are still missing. We don't know what percent of its workforce will be impacted. We don't know how soon these employees will be let go. I mean, we don't know so many of the logistics and the financial excitement that typically sends shares rallying. We don't know any of those numbers yet. We don't know what the impact or the efficiency plan behind this news, but it's definitely seen as a positive here by investors, clearly with the shares reacting as such. McDonald's shares now up over 7% this year, up over 13% over the last 12 months, which is really impressive given the difficult discretionary environment we've seen over the last 12 months, but still, you know, right around 23% off of its yearly low here, and obviously right around all-time highs. So I think this story is one you have to wait and see to get more details, because all the exciting parts to me are still yet to be disclosed. But this is a story that does impact us here locally in Chicago, as McDonald's is headquartered just right around where our office is currently located. So one that is, you know, a hometown favorite, but not necessarily the most positive news, Nicole.
All right. Thank you so much, Jenny Horn. A good look there at McDonald's today with an important story. Thanks, Jenny. Now, let's
I told
turn
you
our
about
attention
oil,
over
bluish,
to
reddish.
investing in carbon capture. John Grimmer is with us, President BRDS CO2. Tell us more about the company. What is it that you focus on a day-to-day basis?
Hi there, good afternoon. So Verde CO2 is a private CCS development company. We're headquartered in Houston, Texas. And so CCS effectively means carbon capture, transportation of that CO2, and then permanent sequestration in the ground. That permanent sequestration is done through special wells that are run by the EPA called
You said yourself you don't want to talk about it.
There's only 2 of those active in America, and Verde is aggressively pursuing several of those. We are heavily focused on decarbonizing point sources across the United States, with a heavy focus on Texas and Louisiana Gulf Coast.
So tell me about
nice engulfing candle there for a little signal buy.
Rush phase. How are we
I think my E-Trade's working again.
Right now?
Well, we are in the CCS gold rush phase, which effectively happens anytime we have a scarcity of deemed quality products. And in this scenario, a CCS project is composed of carbon capture, equipment, CO2 transportation, and the land
volume is
necessary
huge
to
on BBY today.
Sequester CO2. And so
White,
the land
large.
is has scarcity around it.
We're at
and
151 million so far.
The right geologic properties. It's got to be in close
Share was
enough proximity to
169,
these
day before
high-quality
was
emission
158.
sources. The next thing we really need is the
Yeah,
emission
it's
partners
not even
themselves.
power hour yet, so
we've gone from a scenario where
I think we'll probably break
all
those
of these
days' records.
industrial factories, heavy industries had CO2 waste products, and now that has a value to it because of the recent legislative changes, mainly associated
double
with the
bottoming
Inflation
here
Reduction Act.
Bed Bath. You just see that on some longer time frames.
Carbon capture and storage, and how it also helps ESG focus and focused companies. How so?
I was almost thinking we were getting island bomb today, but
we are
it filled that gap real fast.
heavy industrial point sources. So anytime
We're
you see
looking
a
at that
smokestack,
island
that
bomb.
is a candidate for Verde. We take those emissions, sequester them underground, and now this factory is effectively net zero. So this is, in a sense, the purest ESG story out there. We're taking care of environmental attributes. Social and governments are also very natural for in governance. The other 2 elements of ESG, very natural to us as well. Within those Class 6 permits I mentioned is strict environmental justice, social justice requirements that we adhere to strictly. So all of our social and governance requirements are fully met.
So with the investment opportunities, would ESG be part of it? Is that what you're thinking? Or what are you talking about when you say investment opportunities?
Yeah, absolutely, Nicole. ESG attributes are fundamentally a part of what Verde CO2 is doing. For the retail investor at the moment, investment opportunities are relatively limited. The players in the CCS space today include some of these large cap C Corps, the oil and gas companies. There are a handful of mid-cap oil and gas companies that are also conducting CCS. But to be a retail investor in those companies, your investment is diluted by oil and gas attributes. Verde CO2 is a pure play. All we do all day long is focus on decarbonizing industrial sources. They could be existing facilities or projects to be built, and we decarbonize, sequester their CO2 permanently underground.
There's a 7 strike for May on 9.
So that is the fundamental of the project, and so it is an inherent ESG story.
I think that when you talk about inherent ESG stories, that's been the theme.
At
And we had
170?
on, John, I'm sure you'd be interested in this. We had on the president and CEO of Calamos Investments. They have over 30 funds, but the newest one that they launched was an ESG-based fund. He said, we want to give our clients the diversity to be able to invest in this because this is what they're clamoring for. And the amount of assets going to ESG, he said it's undeniable. In the next few years, the ticker symbol was SROI, and he had the Milwaukee Bucks, Giannis Antetokounmpo, in a joint venture for this fund. But
well, that's today.
the point was that he was saying
can I get further back chart? Did they just add this option?
It's really going to ESG in the years ahead.
Absolutely. The investment desire is, there's no doubt it is insatiable. What investors continuously tell us is they're looking for projects, high quality projects that are well understood, well articulated, firm contracts. And so that's what Verde is out hustling for right now. The SEC, as you probably saw last year, put strict controls and definitions around these funds that are deemed ESG. They are holding these investors' feet to the fire, ensuring that they genuinely are not greenwashing and investing this allocated capital directly to bona fide ESG decarbonization projects.
John Grimmer, great to see you. President Verde CO2. Thanks, John.
Thank you.
Still ahead, we're going to bring in our panel. We have to discuss all things Apple. The iPhone maker is among the most popular stocks in the street. And what about going forward? We heard a little bit about it from Dan Ives.
I don't like buying into it. It's up 13% though. Put it in my notes, maybe pick it up tomorrow. NBA star Jimmy Butler, BitBoy Graham Stephan, and Binance's CZ have been sued for $1 billion for allegedly trading cryptocurrencies as unregistered securities and for reportedly unlawfully touting the tokens on social media. Wow. That's which portfolio. Funny, my most read one is green this year. Oh, today it flipped red. My large ones, though, they're supposed to be safer. Those are the ones I mess with BBY on. And those are red. GFAI breaking out higher. %180%. Yeah, GME's IV is very cheap. But it seems like it might stay that way. I don't know. I think that's part of the attributes of it being fixed. Fine, moving up more.
Still 3 weeks away, but no shortage of news for the iPhone maker. We welcome in our panel Daniel Rubino, Executive Editor, Windows Central, Kevin Riley, Managing Partner, Exponential Investment Partners.
Their audio.
We just had on Dan Ives, who thinks this is going to $3 trillion market cap. Daniel Rubino, I'll start with you. What are you thinking about what drives Apple? Are you a fan?
Yeah, I mean, I'm a fan.
Yeah,
They're
just her audio.
a company that's reliable, right, when it comes to technology and returns. And so I think they're going to do quite well. They usually overperform for Q2. There's rumors that the issues they've had with production, especially in China, have been alleviated, and that might have, brought back demand for the iPhone 14, which is still doing quite well in the market. So it's going to be interesting to see what those numbers are there. I will say, however, though, the issue with their hardware is the market is basically flat for smartphones. So this is just across Android and Apple. And for 2023, we may even see a slight negative decline for new smartphones, which I don't think is too unusual. So it's not a growth.
0.15. You plan on selling it, Blue?
The thing is, today we just learned about the
taking your profits.
Apparently, according to a report out of Korea, Apple had a
suspended approaching 300
of its M2
processor
for January and February for its new MacBook laptops due to low demand. Now, they have since increased production in March, but it's still about half the level of where they were before, which basically implies that the MacBooks aren't selling that great. Now, is that Apple's fault? No, the laptop market is also either flat or slightly declining as well. I think they also have another hidden problem here, though. Their chips are so good that consumers who buy their devices rarely will see a need to upgrade their devices. So people are going to hold on to these laptops for many years, which means
Buy
Apple
has
needs
also
to
been
try
straight
to
up.
grow its market outside the Apple ecosystem. So long as the iPhone and iPad continue to do well, they will slowly gain market share, but I don't know if we're going to see that in the next few quarters.
Right. You know, Daniel, I also want to ask you about the mixed reality headset. AR, VR. In the meantime, Kevin, I mean, what do you think? You feel free to comment on the headset, Kevin, but what are you thinking about Apple, where it's headed?
Well, I'm looking at it more so from a technical stock trading position. And, you know, the stock has had quite a run this year, that's true, but it's coming off a level of around 130 or so. And, you know, it's sitting around 164 or so right now. It previously had topped out at 180. So there would seem to be some upside room there. And, you know, the 10-day chart is above the 50, which is above the 200. The one thing I would caution, though, is the RSI on the thing on a 6-month chart is quite high. It's in the high 60s right now. So it's dangerously close to being overbought. So I would suggest that perhaps there could be some pullbacks, you know, here and there on any given day. But, you know, since it's in this general uptrend right now, I would say buy the dips. I think we're going back to this, you know, 2020, 2021 era where buying the dips, you know, the FANG stocks really worked.
GME actually getting all the push on that.
Had over a $200 target. But let's talk about, you know, what's going on here with Tim Cook pushing to get the devices shipped. And I'm talking about 30%. These headsets. Daniel Rubino, even though there are some objections, he really wants to get this going. What do you think is the debate?
Yeah, so we've been talking about this headset for what seems like years now. And in fact, it has been years. In fact, I think I was on the show a year ago saying we're about to hear this thing being announced, and it keeps getting pushed back. Now, the rumor is it's going to be announced finally in June. I would expect availability shortly after that, but their initial play seems to be going after its developer base, which is quite strong and will likely fork over what is expected to be the $3,000 price tag for this thing. Now, is this a good move at this time? I'm a lot more skeptical now, as we've seen mixed reality, VR, and everything just really has not delivered. Meta has pulled back. Microsoft has pulled back. All these companies are pulling back on the whole metaverse. In fact, what's taking over the news cycle has been AI, something which Apple's been very quiet on. In fact, today GQ just had a huge profile on Tim Cook talking about technology and the future of Apple, and not once in the article was AI even mentioned or brought up. Instead, they brought up the mixed reality and how Tim Cook basically reversed his position from 2015, saying this doesn't seem like a technology that we want to develop. We prefer things that work in the background and just fade away. That seems to have changed. I don't know if this is going to be the surefire hit that they expect it to be or want it to be. I think the market has changed a lot. But then again, Apple will impress with the hardware and the software. So I think a lot of people will be wowed by it. But whether or not that turns into the next consumer hit, I'm not convinced yet.
It's amazing they didn't really talk about AI, since in all the company conference calls that seems to be very prevalent. Kevin, let's broaden it out. When you talked about buying Apple on the dip, what about the other names? We think about AI and it's been driving some of the big names in tech. What names would you consider buying on the dip as well?
Basically, Amazon hasn't gone anywhere for 2 years. So I've been saying this for a while and I've been wrong, but you know, it sure feels like that coiled spring to me there. One of these days, it's you know, the next earnings report or something like that, they'll come out and they'll surprise to the upside and that stock's just going to blow higher. So that would be a strong contender there. I also think Google, and if you don't mind, Nicole, I'd like to say one thing about Apple and AI. Yes, they haven't been saying much about it, but interestingly, I think that might actually be a good strategy, because, you know, look at what happened with Google when they botched that, you know, rollout of their AI-related product. You know, you can really hurt yourself from a stock point standpoint sometime if things don't go right for you. And you know, Apple bought this Wave 1 company, and you know, it's supposed to help them with compression and whatnot. But you know, we'll see if it really helps or not. But I think kind of laying low on the AI thing might actually be a good strategy. Counterintuitive.
Huh. Yeah. And final thoughts, Daniel Rubino, about when it comes to things like gaming and stuff. I mean, I know we're talking about this headset, but are there other names that you're watching so closely, whether it's the chip makers or the gaming names themselves?
Sure. Actually, you're talking about kind of mixed reality, augmented reality stuff. A company called Nreal, beginning with a capital N Real, been out for a couple of years. They have a headset that's around $300. You can purchase it now right on Amazon. Type-C cable plugs into your. It has a. If you use a converter, it can connect to your iPhone, connect to Android, connect to Windows PC, connect to your gaming handheld, and it gives you augmented reality in the sense that you'll have a 108-foot screen, virtual screen, floating in front of your eyes, and it's really awesome for gaming. This is the kind of practical technology that I'm interested in. I think is just way more realistic. At $300, people can buy it right now. It works quite well. So especially for gaming, right? But you can even plug this into your iPhone and game on your iPhone with a giant virtual screen in front of you. It's really wild stuff. So I like that.
That sounds cool. It's great to see you both, and thank you for this. I appreciate it, Daniel and Kevin. Daniel Rubino, Windows Central. Kevin Riley, Exponential Investment Partners. Thanks. That's going to do it for us here on the watch list. It's Monday. It's a 4-day week. Friday, we're off for the Good Friday holiday here in the markets, but that's the day we get the jobs report. Lots to watch. I'm Nicole Fedelides. Thanks for watching. Market on Close is next.
It's true. Almost power hour. Wow. $107.62, you say? Just climbing up here still.
You can see on the chart here where the rejection has occurred several times. 80 bucks used to be sort of a support
AI
level.
holding up there, consolidating at the high.
But it's not just the OPEC cut. You can also generally see that the way crude sold off during the bank panic, it traded like a cyclical, economically sensitive asset when the market and participants were looking at the bank situation as a major economic warning sign. And so that seems to have been overdone. Energy was really the only group that traded as bad as the banks over the last few weeks, but it snapped back pretty hard here. And so now trading back at 80 bucks, things get really interesting. XLE, the energy ETF, higher by almost 5%. Of course, it's going to play out the way you expect. Companies like Oxy, the high beta group, and the favorites shining on a day like today. But again, technically speaking, as far as the chart goes, nothing too alarming here just yet. Keep your eyes on it. Lower highs, lower lows means that the onus really is on the bulls to prove that they can still control the energy charts at this moment, given that it's really been about 6 months of pretty steady weakness in this group. If you take the longer term chart, stretch it back more than a year and a half or so, then obviously there's a case to be made here that energy prices are still pretty buoyant. So we'll find out as the trade really comes to a head with the surprise cut led by the Saudis at OPEC, but also stories that I'm reading today saying that energy companies here in the U.S. are not going to be quick to step up. Why didn't the administration buy oil down at the sub-80 levels like they had indicated they would for the strategic petroleum reserves? That to me is mind-boggling. Talked about it this morning. Seemed like an easy trade, but hey, trading is hard, and I guess the administration is going to learn that way. All right, looking at bonds right now, you would think that if I told you crude was bringing inflationary forces back into the market, the yields might be higher. And this is where it gets a little bit mixed up here today, and I think we're in a period of flux right now where the market is still trying to figure out if inflation is a bigger problem than recession or if they're both just hand in hand. That, of course, would be the worst scenario. Elevated inflation, a still hawkish Fed, and a slowing economy. I think bonds are going to tell us if that's the case. 3.5 is held over and over again. Now we're a little bit below it at 3.4 in the 10-year, suggesting that we do have some economic risk still very much baked into long bonds as investors are buying up treasuries, and they've been doing it throughout the day since our economic data this morning fell flat. We had ISM, we had PMIs, both were pretty soft. It looked like maybe the market was going to like that ISM because the prices paid was down. The new orders were down also, though. So a pretty clear correlation between deflation in the prices paid and just slowing of activity in general. Market for a moment tried to spin that as bad news being good for stocks, but it didn't get too far. High beta stocks are down on the day. The SPHB ETF lower by 1%. And we see a little bit of that fade from the recent bid into tech companies around the whole bad is good narrative. So at the same time, Bitcoin's stalling out. Don't want to make too much of it just yet. We get a little chop below 30K. We expected Bitcoin to have trouble here at this level.
New low on
BBBY,
BBBY, 3608.
Hit a wall. The Nasdaq might be slowing
Could
down
be the
as
double
well.
bottom on the
Even though
day,
the correlation
down
between the two
15%.
kind of faded a few times this year. It came back real strong.
Between 2012
and that's important to
2019.
note that in the last month, as the market took the bank situation and applied it to the Fed's outlook for interest rate hikes, market now turning those into cuts. Of course, they love Bitcoin, they love growth stocks when that's the case, but now both seem to be running out of steam a little bit here, but not unwinding. So keep an eye on it. If BTC gets above 30 and you see the Nasdaq trading back towards 14,000, you've got some potential major continuation of the overall bull market we've gotten since October in growth stocks. But today it's taking a little bit of a breather. And what is working? Gold.
I know,
Keep
yeah,
an eye
you're
on
kind
gold
of
2,000. We're at 3-year highs for gold, and it
breaking
seems to be
out a
kind
little
of a
bit
catch-all
today.
trade. Worked last year, did its job preserving capital while inflation eroded everything else. And this year, gold seems to be catching a bid on geopolitical concerns, bank concerns, inflation.
Yeah, really
Gold's looking pretty solid
223
right
or
now.
so.
And days like today, where the market's overall pretty mixed, gold seems to be naturally catching a bid, and I think that's pretty encouraging for the bugs out there. All right, let's talk some stocks. I got
If this is going up to 300,
you
think the SPY is going to break this high?
New York Stock Exchange. Renita's here with me in
416.
Chicago. Renita, let's kind of start with this morning because a big
Go
part
up
of
to
the weakness in the
426.
Nasdaq, which stands out, is Tesla. So let's just go
You
through
must.
it again. What's going on?
Well, we saw the much-awaited Tesla deliveries for the first quarter come in on Sunday night, and they were actually below most analysts' expectations. And this marked the 4th straight quarter that the company produced more vehicles than it actually delivered. And so let's take a look at those delivery numbers. For the first quarter of 2023, they came in at close to 423,000. That was a 36% increase year over year, but a 4% increase from the quarter before. The majority of those vehicles, though, were the lower-priced Model 3 and Model Y vehicles. And so total production was at close to 441,000. The inflated production was a result of Tesla ramping up production in Shanghai, ramping up production in other areas as well. And so a few analysts have been talking today. Barclays says that the inventory build continues with about 75,000 units of production over deliveries in the last 3 quarters for Tesla. Baird reiterated its outperform rating and a $252 price target for Tesla. Citi says that the growing spread between production and deliveries is likely going to maintain focus, but you know what a lot of other folks say? It's going to be margin that the focus shifts to, as well as profitability data that will, of course, come out on April 19th when the company presents its earnings. But many analysts are saying that because commodity costs are getting a little bit better, but Tesla's price cuts are likely going to weigh on margins. But this is a double-edged sword because we have some investors,
GME
some
did kind of come down and
analysts
retest
who are
this
saying that
breakout
Tesla's
line.
going to have to continue to cut prices
Use it as support,
if it wants
so
to
it's
make
looking
its
good.
delivery quota. So it's really an interesting report. Tesla also has some bad
looking
press
good.
happen in the news.
I'm ready for it to go
From
parabolic.
Friday, actually, the New York Times is reporting that a federal appeals court affirmed a finding that Tesla illegally fired an employee involved in union organizing, and that CEO Elon Musk threatened work stock options if they chose to unionize. And so that opinion, it actually allows the National Labor Relations Board to enforce that 2021 rule to reinstate this worker, to give this worker back their job with back pay. And Musk has to, of course, delete the tweet. That's always a part of it.
The way it culminates, the most painful part for Mr. Musk is he has to delete the tweet.
Right.
Okay, and he's busy on there today putting Doge.
All right, I average into
around
my
instead of Twitter
April
signals.
calls.
I heard Dan Ives on Nicole's show just a moment ago talking about how the response is a knee-jerk reaction, that it shouldn't be too bad of an issue. But then also I'm reading Ross Gerber, obviously a big Musk and Twitter fan, or rather Tesla fan, say that there's might be some real indication of weakness here. So it does kind of seem like among some of the
Yeah, it's down like 45% on it.
Tesla supporters are a little mixed on this.
No, I'm only down 16. I had one. I think I got 4 more. So
Analysts have always been
average
mixed
down
on Tesla. This is one that I feel like analysts are all over the map for
Sure.
this one.
Those two
Obviously,
guys,
Dan
though.
Ives,
Heavy's only
they're
67%.
although, you know,
Dude.
there are other analysts with
If we
even
do get a
higher
parabolic
price
move, these
targets than Dan
contracts
Ives,
are
so
going
we
to go
call him the
insane.
Purple, but he's not the most optimistic on the street. I think obviously the demand picture is going to very much be in focus, but as Renita made reference to, this is going to be all about the margins. Dan Ives had actually said recently that he wouldn't be surprised if Tesla continued to cut
If I didn't already have
prices,
25s,
both here
I'd
in
probably
the
get closer to the
and
money.
in China
But
to really spur demand,
whatever,
but it comes
25s
at a
will work.
cost, right? So that would be margin pressure. And I was looking at some of the estimates. He says that 20% is the number to look at.
Maybe they won't go
Deutsche Bank
insane.
said they're expecting around
I don't know. We did have this 50% gap up,
for
and
the
contracts were up
margins. That would all be down from 29%
400%, I think.
in the first
This
quarter
wasn't
of
that
2022.
insane at all.
So definitely margin pressure. I think the other thing you have to think about is the fact
It
that
really
Tesla's
has to.
already
The
up
stock
about
has to
60%,
move big
almost
intraday and
60%
get
so far this year. So
squeezy like
a
we've
little
seen.
bit priced to perfection. Have to see what was at 1.8 million was the
Next is
estimate.
a short week
Elon
too.
Musk said as long as there are no production issues, could be as high as 2 million this year. Always says it's a production issue versus a demand issue. We'll have to see if that continues in this kind of murky macro environment.
Okay.
GME might be the catalyst to wake up
Clearly
BBY,
not
actually.
liking it today, down 6.5%.
Looks like BBY is double bottoming here
okay.
today.
Well, we'll see what happens the rest of this week. Certainly, we've been here many times for Tesla.
Might pick up
shy
some
of
calls in it.
$200 roughly. This is a
Just,
pretty consistent
like,
range for
trade 'em.
A few other
Sell 'em
stories I
tomorrow
think
and
deserve
maybe
some
a
attention,
bounce.
given the data this week is going to be very employment-focused, Renita, is an analyst downgrade. And ADP, we talked about that one earlier this morning, but Paycheck's also part of it. And even though these are not two companies we think of as oftentimes moving the market, there's a real important macro implication in this analyst report.
There's a huge, exactly as you say. You know why? Because they are part of the employment process. You know, you have Paychex processing as well as ADP processing when
picked
it
up some
comes
BY
to
calls too.
paychecks of employees as well as onboarding
I like
new
the price,
employees
double
as well.
bottom.
And so the analysts
Not getting
at
shares.
Bank
I
of
don't see
America
a
downgraded both,
longer term
to underperform from neutral.
reversal
for
yet, but
ADP, cut the price target
little exposure
to
for after hours.
$211 from $249. That still suggests around a
maybe for a
3%
little
move to the upside.
liquidity
for what's
bounce.
trading
Really,
now.
shares maybe
But
make
the
sense
analyst says that on
to
the
get selling
ADP
after hours, but
sales or the
well.
backdrop, I should say, of slower sales growth and the waning estimate potential shows that it could be a risk to the stock's valuation multiple, and that on both ends, he says that they tend to become less appealing as investors see these macro tailwinds coming in, impacting employment data, and Bank of America's own data also is pricing in a downturn in the second half of the year, pricing in lower employment numbers as well, and that Paychex as well as ADP, they tend to underperform the S&P 500 during that initial phase of
this thing just
rising
started
unemployment.
barcoding all of a sudden.
And so that's something that we're going to watch out for, of course, this
That
Friday as we
$1.50
see things
barcode.
happen. If we see unemployment numbers tick up, we'll find out
bought birds.
truly if this holds true, if Paychex and
Wish.
ADP will start to see less
I don't know
strength.
about that birds.
Okay. Well, we know that
It's
this
looking
is
all
going to be
right.
our focus pretty
Of course,
much the
they're
rest of the
short.
week. I mean, it's all
it's
culminating
almost
with
green.
employment. The backdrop, of
Nvidia's
course,
short.
being the uncertainty around the
Wow.
Fed's next moves.
Yeah, it's just rallying with the
It's only
market.
one analyst, but it seems like there's some conviction here that they see some
Mike
slowdown
closes
coming
on
for employment, Caroline.
And you know, Oliver, I love to kind of put one analyst's perspective into perspective
Sure, yeah,
in
the
terms of
On
what
a
else
morning
the street
dip
is
if it
saying.
does it.
And I do want to say that this analyst is in the minority. The majority of analysts still have hold ratings for both Paychex and ADP. Looking at the breakdown, 3 buys, 13 holds, 4 sells for Paychex, almost the same. 4 buys, 14 holds, 4 sells for ADP. So definitely analysts more neutral than bearish, like Bank of America. But you know, that's really what stuck out to me. Expects unemployment to start rising in Q3. Peak in Q4 of 2024, forecasting just one more 25 basis point rate hike, Bank of America that is, just to before they start actually cutting rates in Q1 of 2024. So very much gearing up for an economic downturn. And I don't know, these surprise OPEC cuts only make matters a little bit worse, I would say, because the Fed's job is even harder now with oil prices ticking higher, not helping the inflation picture. So, you know, we're really kicking off Q2 with a lot of forces still at play. I thought maybe we'd get an easy start, but not quite.
Not quite, yeah, certainly. makes it worse or complicated, but not better by any means. So appreciate it, guys. Good stuff for Nita Young and Caroline Woods. Nice work kicking things off here. Let's talk some more about what to do in uncertain situations like this. Jeff Phipps joins us, trading strategist and portfolio manager at Picton Mahoney. Jeff, welcome to the show. This is an interesting moment because the market got real excited over the last 3 weeks here about potential rate cuts, but then now it's like they don't know what to do.
MCB had a bounce there with some volume.
Start to soften. Are we like the dog that caught up to the car? We got, we don't know what to do now.
That's a good analogy, Oliver. I think big picture, the market is still trying to come to terms with the nature of the type of inflation we're experiencing. And this directly affects the implied path of policy growth and ultimately what it means for broader liquidity. So you think about the notion that's been held for some time that central banks hike until they break something and then pivot rapidly. This has largely been the case since the late 80s, particularly since the GFC. But this notion is,
is being double bottom on the 5 minute. Right, bullish MACD, green over the 9.
We've seen a
start stretching this to longer time frames,
addressing some of these asset liquidity issues with a sort of ring-fenced approach while maintaining their path for now of tightening.
So the potential liquidity influx from the bank rescue here, we saw the balance sheet numbers climb. A lot of folks were comparing it to other moments of Fed stimulus. It's a little bit different. It's a little bit similar in some ways. Does that have potential to kind of pave a road for equity prices and valuations to rise, or is that just kind of a one-time knee-jerk reaction by the market in the last couple of weeks?
Well, I think the reality is that the path of removing liquidity in an attempt to address inflation, it doesn't happen in a straight line. We've seen some liquidity measures of central bank liquidity actually increase on an absolute and rate of change basis well before March. And some of this has come through previously funded fiscal measures, such as treasury balances making its way into the system, which are inflationary, of course. And so I think the hardest thing for and also we're coming out of this period in March where the entire short-term interest rate market repriced very quickly with the onset of these regional bank issues. And markets do take cues from that short-term rates market in terms of the implied Fed funds path.
Okay. So right now, the potential here of inflation sticking around while the economy slows, that's something more like a stagflation scenario. Should we be worried about that worst case situation coming true? How do you kind of define that very kind of hot button term? There's a lot of stigma attached to that term. Are we going to have to start using it?
Well, this is a market still very aligned and very reactive to the shorter term. A very heavy sort of central bank communication policy is not particularly helpful when we do have a Fed that is data dependent and economic volatility is high. So I think that when you have these regimes where if structural inflation is what we're entering, or if that's in front of us, those environments generally do create a more volatile cyclical dynamic as well. This was the case in late 60s to early 80s with 3 inflation peaks and 4 recessions. So I guess the point is, Oliver, that there can be a lot of head fakes from a mission accomplished perspective, as well as the other way.
Okay. So right now, the mission accomplished, which part of the market do you think might be falsely proclaiming that? Is that some of this kind of valuation run-up that we've gotten the last few weeks?
I think so. Back to my comments on liquidity, I think if you look at the U.S., for instance, before the regional bank issues, which did increase the size of the balance sheet. Of course, all liquidity is not created equal. The Fed balance sheet sat around 8.4 trillion, which was about a $450 billion reduction since the end of September due to QT. But about 75% of this was offset by draws in the TGA, while the reverse repo was basically unchanged. And we've seen other central banks similar dynamics. We've also come through a pretty event-heavy month in March. We've had end of quarter, which has some large hedging flows. We had an important Fed meeting, obviously these bank issues. We also had a reversion in some of this incredible volatility in the short-term rates market. So with all of that behind us, I think April is a really important month. It is historically a month that is prone to reversals in sectors and quant factors as well. Seasonality is generally pretty strong this time of year, but I think that has to be taken with a little bit of an asterisk, given the fact that the liquidity is being drained by the central banks globally. That still is their intention.
Okay. Jeff, when you talk with clients right now, are there any obvious solutions, plays, investments? Got about a minute here. Tell me something that stands out to you.
Sure. I mean, our view is that from a tactical perspective, we obviously see a high amount of short-term volatility across asset classes. I think positioning is very important in these types of environments. One has to align their long-term portfolios in a way that will be aligned with a scenario of structural inflation. If that
still believe in the play.
In our view, other than the obvious
nothing's changed since when you bought
duration, our view is that some of the free lunch that active managers have had
hold or buy
the
more
last decade with respect to sort of free riding
why
on
you bought it in
beta,
the first place
is probably behind
still
us.
there.
And our view is that alternatives are very important in this type of environment. It's simply probably pretty similar with respect to passives on a secular basis. And again, short-term positioning is very important. A lot of these huge moves we've seen in rates and vol and in a number of asset classes are related to positioning becoming very heavy into a catalyst.
Got it. Okay. Jeff will be in touch. Thanks for the setup. Good stuff for us to think about.
Thank you.
Absolutely. Jeff Phipps joining us from Picton Mahoney. When we come back, let's talk some tech. As the market here tries to firm up, NASDAQ has been down on the session, but
RS has not happened yet. That's true. It hasn't even been voted on yet. Reverse split. Get a bounce, double bottom on that 36 cents. VWAP's at 38. See if we're starting to get a rounding bottom here. Too soon to tell. GFAI. Little bull flag up here. Looks like it wants to break out again. 20 to 1. Potentially, yeah, we don't know the amount. We don't know the date. But yeah, they did change it to 20 to 1. Keep an eye on this one. This is the last stock that I know of that just had a reverse split. This did it a little bit different though because it was kind of a spin-off also. Let's see, this got just dropped heavy on the reverse split, so that could be the case. Could rip. I feel like we'll probably see a rally before the split. I know there's some people that don't think that, but a lot of the stocks that seem to have high short interest, they have kind of rallies before the splits. SPY moving up there. Maybe too soon on the video. GFAI 180%. Okay, I need to do my video. I've got time. I'm able to do it still today, so that should come out about 30 minutes or so. Pretty slow day on the market. Thank you guys so much for your support, though. Thank you, Big Hugs, for your dono. Ace Ventura, thank you again. Very generous. Much appreciated. Thank you, guys. Thanks for your subscriptions. If you haven't subscribed, do it. Hit the bell. Hit the thumbs up. 44 likes today. Well done, guys. Thanks for your support and hanging out with me on these slow days even. So thanks Trader, thanks Jonathan, thanks JDF, thanks Owl, Big Hugs, Human Shop Rag, and thank you all. We'll see you on the premiere for the video. Have a good lovely afternoon and good night.